Hey everyone, welcome to this first workshop on the MRI. The MRI stands for the Momentum Reversal Indicator, which I put together and released just a few weeks ago. And now it's time to do this workshop in order for everyone to understand how it could be used to assist in your trading journey. I'd like to welcome everyone that signed up for this workshop. Thank you. And you will, of course, get this video afterwards. I'm not going to waste too much time. We're going right into the presentation. There is no reason for me to talk about myself. And we are jumping right into it. Okay, I am, of course, Tone Vays. Thank you, everyone, for watching my channel. Those of you that attended my other workshops, the first couple of slides will be identical, and I will be going through them very, very quickly. There are 3 parts to being a trader. And I love the words of Wells Wilder Jr. from his book, New Concepts in Technical Trading Systems. And this was on his last page, where he said the following. The message of this book is that there are 3 parts to a good technical trading plan. Using a good technical system, using the system on the right markets at the right time, and the third, using a good money management technique. Of the 3, the third is the most important, the easiest to learn, and the hardest to do. Okay, so I have my own view on these 3 points. And this slide has slightly different text depending on which workshop I am teaching. So for number 1, using a good technical system. This was covered in my workshop on Introduction to Technical Analysis. And it demonstrates dozens of trading systems for you to specialize in. But be careful, don't fall down the rabbit hole of using too many at once. So the Intro to Trading workshop talks about candlesticks and chart patterns and at least a dozen oscillators and also Fibonacci's and trend lines and moving averages and everything. And it briefly mentions MRI. Now, this workshop will focus on one of these trading systems. And this brings us, I'm going to briefly mention number 3 first, and then we're going to do number 2. So this workshop falls into the number 2 range. So number 3, which is using a good money management technique. This was covered in my workshop, Money and Position Management, and it is very important, the easiest to learn, and the hardest to do. Exactly what he says. We will use some of the things from that workshop in the second half of today. But this workshop actually focuses on number 2. Now, what I normally say for number 2 is something every trader needs to discover on his own or on their own. I want to be grammatically correct. Those that don't end up following other traders who may, those that don't solve number 2 on their own, you end up following other traders who may or may not have solved number 2. You don't know. I never recommend anyone follow any other traders. I recommend you learn technical analysis trading or fundamental analysis trading, doesn't matter. I just don't think our retail trader can compete in the fundamental analysis game. You select a couple of trading technical systems and you specialize in them and you build your own trading strategy. This workshop will present a trading system that has been pretty effective in helping me solve this critical challenge. So this was one of the very few things that helped me solve number 2 for me to develop my own trading system and style. Now, I have had several of those over the years, a couple in the option space, one in the day trading space where I talked about trading the 10 a.m. reversal, and this was another one. And hopefully this will help you understand the MRI, but you will still need to develop your own trading style with the MRI. Don't depend on what I did years ago because it may or may not still be as good as it was back then. Okay, what kind of a trader are you? And you can be a position trader. This was more like Tyler Jenks. trades a few times a month on weekly time frames for decision making. Positions are often left to run for months or even years. These traders do fundamental analysis before you invest your money in something for a long time. There are also swing traders. This was my specialty. These are you trade a few times a week on daily time frame for your decision making. Your positions are usually closed within a few weeks unless the trade goes against you quickly or higher level trend keeps you in. So normally it's a trade that will last a few weeks. Unless you make a lot of money quickly, you can get out, or if it keeps making you money slowly, you can stay in longer. But if it goes against you quickly, you should get out very, very quick. Execution can be done on lower level time frames. These traders do minimal fundamental analysis and should be extra careful when trading against the weekly trend or ahead of news. So swing traders need to be careful. If there is earnings are coming and you should not be in the trade, FDA decisions are coming on your stock, you should not be in the trade. Crazy events are happening, you probably should not be in the trade. And also, if the weekly chart is telling you to be bearish, but the daily chart's bullish, you may want to be careful with that bullish trade. And finally, there's day traders. You trade a few times a day, you do not go to sleep with positions, and you do almost zero fundamental analysis because you don't have the time to do that as a day trader. So the MRI is mostly for swing traders. It has some relevance for position traders and some relevance for day traders as well. But its sweet spot is the swing trader. Okay, Tone, the 3 rules of trading, my 3 rules of trading. We went through these in depth in the risk management workshop, so you may want to check that out. I'm just going to mention them, but I'm not going to describe them in detail because that was covered in a different workshop. Do not double down losing positions. It's common to think that by doubling down, you lower your average entry price. In reality, it's better to admit you've made a mistake on your trade, and adding to it is likely to make it worse. Do not remove your stop loss. I'm sure you've said the following: I'm going to remove this just this one time, and now think about how quickly you regret this decision by saying it's okay, I will just hold. I will just hold it for the long term. Again, these are just the common mistakes. Do not let winning trades lose money. It was very frustrating for me when I made a perfect trade. I got in, the trade started making me money. I thought I was a genius, and then I watched it go against me, and I just let my winning trades become losers. And now you start to break rule number 2 by removing the stop loss, and then you start to break rule number 1 by adding to a bad trade. Like nothing good ever happens. Okay, so a little history on the momentum reversal indicator. I want to be done with these intros very, very quickly so we can go immediately into the MRI. So a little history on the momentum reversal indicator. So it represents an evolution of a lot of work that came before it. Things always evolve. I hope you guys have watched Tyler Jenks's videos in the past where he talked about these evolutions of technical trading systems. Now, the roots of the MRI go back to 1980, and I even have the actual document. The document was titled Sequential, the third element of thrust dynamics in 1980, and it was taught to Tyler Jenks of Lucid Investments by Larry Williams himself. I had spent some time with Tyler talking about what he learned back in 1980 because I had my own education with that. And I learned about it from another gentleman who was working at Stifel, Nicholas and Company. And I was on his notification list. And I'll show you what my emails looked like at the time. And that's when I learned how to trade the TD Sequential, which is an indicator created by Tom DeMark, which is very, very similar to the sequential from 1980's Larry Williams document. Now, the MRI is a unique way of looking at charts. So it uses some of the math behind those other indicators, but it is completely unique, and I will show you why. MRI is a unique way of looking at markets because it relies more on time than price. in order to identify exhaustion points in trend. In addition, it's able to identify areas where trends are ready to extend and potentially make new highs or new lows. It's a truly unique trading system that can be used independently to trade the markets without reliance on any other technical trading technique. Now, because of many trademarks, there will be a lot of terminology that is unique to the MRI. So let's go back through a little bit of history, and I'll show you where and how I learned to trade what at the time used to be called the TD sequential, and how that trading with the TD sequential helped me create MRI. So that list that I was talking about, here it is. And I would get emails every single day. Now, if you see, this was my inbox. I still have not all these emails, but I have most of these emails. So this is from 2016. I got on this email list in 2008, I want to say, 2007, 2008. So I've been on this list for a decade. And it was coming from a man named Kevin O'Dowd, who I've recently had conversations with. I finally was able to get a hold of him like last month. For the first time, we had a chat. And I thanked him for educating me on how to trade the TD sequential back in the day. Just by being on his email list. He didn't even know who I was. I kind of got lucky. I don't even remember how I got on his amazing list. And what you're looking at right here is about 7 days worth of email. So the date at the bottom is November 11th, 2016, and the date at the top is November 18th. So this is 7 days worth of emails with a weekend in between. So because you don't really get much on the weekends because the markets are closed. So this is how many emails and notifications I would get about assets all around the world. And you can look at them. Like some of these were reports, some of these were economic reports, some of these were like full-blown 10-page reports on trading. And there were also things like copper, TD13 sell, and bearish price flip. And these were notifications. DAX, TD6 of 9. And I didn't even know what this was at the time when I was getting these. But imagine getting up to 10 emails a day that were very, very descriptive. They looked like this. This was an email, and I used to turn these emails into readable JPEGs so that I can refer to them easily in the future. And I would write down the commentary. So I would get emails like this with a long description, Nikkei, the Japanese stocks, this benchmark Japanese index gained another 3.68% last week and has now given us a return of 10.9%. So this was basically like a client notification list on trading. And you can see the bottom line, TD13 sell with no formidable resistance in sight. I would need to see a bearish price flip and TD reference close confirmation to get defensive. Stay long until proven otherwise. Next stop, a couple of targets. So it's acknowledging the fact that there is a 13 sell according to sequential. However, it's also saying that until you see weakness in the chart, you just stay with the long trade. And this chart is dated November 6, 2017. Let's look at another example. I'll try to go through these fast. This is the Dow Jones INDUs, the Dow Jones Industrial Average. Let's look at the date, 12th of December, 2017. Commentary on the stock market, and let's read the bottom line. Worry less about the market and instead remain much more concerned about the composition of your portfolio. TD reference close confirmation, upside continuance. You are on 3 of 13, and here are your targets, 24,407, 25,648. So you can see in the chart that, yes, we had a 9 right there, according to the TD indicator. And now we have started new counts. We are going higher, where we started the countdown phase, which is a part of the sequential, and it's going higher. So these are just examples of how I learned it. Here's another example of the S&P 500. It's a follow-up from probably an email a few days earlier. and I wrote it down from March 16th. This one is probably got 2 emails on that day because this is also dated March 16th. A bottom line, a grinder, range bound with a downside bias as yesterday's bearish price flip. So everything was about this one indicator. And there were other TAs involved. You can see how here's the Ichimoku cloud and the MACD and other indicators. But 90% of all technical analysis done here was using Tom DeMark's sequential. And here is where I was already using my own indicator. And this is how I realized some of the things that I'm doing are very beneficial. And yeah, I would love to spend more time talking to Kevin O'Dowd to show him what I've done with the MRI to see if I can get him to see if I can convince him that some of the changes that I've made are very beneficial to trading. So you can see right here, and we're going to look at this exact time period. This was January 26th, 2018. And this is an absolute expert at the Tom DeMark sequential. This is how, like I said, this is how I learned it. You get 10 of these emails a day, you start to really understand how to trade it. And it really did help me in my trading. TD 8 of 13. And our target has been broken of 28.57. This is on the S&P in 2018. Clears the path towards, and there's a couple of more targets. Trading stops are adjusted accordingly, and we're moving the bar to a close below 28.32, followed by lower open and lower low. The end game, long until proven otherwise. And you can see by this chart that you have an 8 of 13 on the sequential in its countdown phase. But you can also see in the commentary, there is absolutely no concern that this could be a potential top. But on my chart in the MRI, there was 2 reasons to be concerned that this was a potential top. And I will explain that. So here is a follow-up from, I believe, 3 days later. So that was January 26th. And this is coming in February 1st, but there was weekends involved. There was a weekend. So this is 3 trading days later. And now you see a purple 13. And the purple 13 in Bloomberg represents the combo 13. So this was one of the things that you needed to make sure that you're looking at potentially more than one countdown. Because while the sequential still had room to get to a 13, and MRI doesn't have 13s, but it does have similar math in the back. There was a combo, and in the MRI, there was an MRI top, but in the TD sequential by Tom DeMark, there was no 9 there, but the MRI does have a top there, and I'm going to talk about why that is. So by February 1st, the realization that there was a combo 13 is now reflected in the emails saying that there was a TD13 sell a few days earlier, because you can always go back and check. And however, there was never a 9. And my trading style is actually very different from the way Kevin O'Dowd trades this indicator, which is very different than the way Tom DeMark trades this indicator, because everyone can have their own trading styles. Back in the day, I was more of a trader of the setup phase, and Kevin was more of a trader of the countdown phase. And the MRI has completely different terminologies. I got 2 more examples, and then we're going to literally jump into the MRI. Good, I was able to get this done in 30 minutes. Here's an example of, this is FANG. So this is Facebook, Apple, Netflix, and Google, and known as the FANG index. And these are the kinds of emails I would get. Some of them would come with long commentary, like you see here. And some of them would come with no commentary that says, hey, TD 9, 13, 9 top, which means you had a 9, then you had a countdown to 13, and then you had a whole other 9, and then down we go. So there was also commentary on all kinds of assets. Here's gold, recommending a buy because you have a 2 that's about to break above a 1, which is a strategy that I also picked up from this email list, along with a 1 to 4 day correction, things that Tom DeMark himself never mentions, because you can have different strategies of any indicator. And I would also get a lot of economic notifications and thoughts, which helped me a great deal over a 10-year period to be more competent in my understanding of economics. And here is an email that came in about the rate hikes. I'm not sure if I can pull a date. This looks like a 2019 email because we're already in 2019, and it had to do with the Fed funds rate. So this is my history of how I learned to trade the Tom DeMark's trading indicators. And here are the pictures of that sequential document that I inherited from Tyler Jenks after his unfortunate passing last year. It's been about 15 months or so. But you can see copyrighted 1980 by Larry Williams. So I can't display the entire document, of course. But here's the first page that describes it. And this was a very interesting read. I'm holding it in my hand. And I also have a 1981 part 2 version of this trading system. And it's incredibly similar to the Tom DeMark sequential system. And reading those documents also helped me piece together as to the original history of this style of trading. And this brings us to the MRI. So what potentially started with those sequential documents in 1980, then evolved into the Tom DeMark sequential system. I believe that Larry Williams and Tom DeMark were working together back then as well to formulate it. I don't really know that history, but these are the people that I credit with me putting so much emphasis on time. Larry Williams's document, Tom DeMark's indicator that I learned to trade through Kevin O'Dowd, along with Tyler Jenks and Martin Armstrong as well, for just giving me an understanding of how important time is. So that was one of the blogs I used to read religiously, and I wish I still had time to read his blog religiously because it taught me a lot about economics and the importance of time in your trading systems. This brings us to the MRI. So the MRI has two parts. The first part is called the trend, and the other is called the extensions of the trend. A trend is defined as 9 consecutive candles where the close is greater than or equals to the close 4 candles earlier. And it's the opposite for a downtrend. So it has to be less than or equals to 4 candles earlier. Okay. And if you have this relationship for 9 consecutive candles, you have completed the trend phase. Now, later on, when we talk about strategies, some people wait for the trend phase to complete before doing any trading. Other people can try to trade the trend as it's happening without waiting for its completion before they start trading. This will be up to you to decide what your trading strategy is going to be, but I will give you some ideas for you to brainstorm. Now, the extensions begin after the trend has completed. So you need these 9 consecutive candles in order to complete the trend. Now, there are 3 different types of extensions. Call them extension A, B, and C. Each of them has a similar but slightly different rule set that kicks off once a trend top or bottom is established. And all I have is one more slide, which talks about the math rules of each of these trends. And after that, we are literally going right into the indicator on TradingView, because the best way to teach is, of course, by example. Now, a trend completion is what is going to be referred to as an MRI top or bottom. I didn't make that many slides because, like I said, I would rather teach by example. But I did want to provide you with the math rules for these extensions in the slides. Just like the math rules for the trend is very, very simple. You need to close identical or higher, or identical or lower for 9 consecutive candles. Now, you can ask, why is it 9? And the answer is, I don't know. But at this point, that's what was done in 1980 with a lot of research and continues to be useful today. You are, of course, welcome to write your own indicators to try and use other numbers. So here's the set of rules for an uptrend and for extension A. So this is extension A, uptrend. So starting with the candle that makes the MRI top, extension A needs 13 non-consecutive candles. They could be consecutive, but they don't have to be. 13 non-consecutive candles where the high is greater or equals to the high 2 candles earlier. Okay, so you're comparing a high of a candle for an uptrend to a high 2 candles earlier. Now, the 13th candle must also trade higher than the 8th candle's close. Okay, so the 8th candle of extension A is also needed to complete the extension A. And the downtrend is just the opposite. You need the low to be less than or equal to the low 2 candles earlier. Okay, and the same thing goes for the 13th candle. It must also trade lower than the 8th candle close. Extension A is usually, though not always, the first to finish in the series. Okay, so extension A would very rarely finish after extension B, though it's possible only based on the 8th candle, a reference. This was actually so hard to program. It's insane. All of these little intricacies. Here are the rules for extension B. Starting with the candle that makes the MRI top, extension B also needs 13 consecutive candles where the close is greater or equal to the high 2 candles earlier. So now, instead of comparing the high of your current candle to the high of a prior candle, now you need the close to be greater than the high 2 candles earlier. So you can see how extension B is almost identical to extension A, but it's more restrictive. It's a lot harder to get a close to be higher than a high from an earlier candle than just to get the high higher than the high of an earlier candle. And this is why extension B will almost always complete after extension A. Extension B will almost always complete after. And the same rule applies for the 13th candle. The 13th candle must also trade higher than the 8th candle close. Same rule as an extension A. There are other minor rules. This is one of them. Only on the 13th candle, the opening of the 13th candle can be used as a proxy for the close. So if you have a 13th candle that passes this rule here, it trades higher, but it only opened that way, and then it just sold off the whole way down, it's still okay because the opening could be used as a proxy for the close. You may not even need to know these rules. You just need to know how to trade extension A, B, and C. But I just wanted to get the math out there in case some people are interested. Some people care about the math behind the RSI or MACD or any other indicator, and some people don't. Some people just say, I know how to trade the MACD, and I don't even know what the MACD stands for, and you know what? I don't care. And that's a perfectly reasonable answer. You don't even need to know what the MRI stands for, as long as it's useful in your trading. Just like you don't need to know what the MACD stands for, as long as it's useful in your trading. Extension C is by far the most complicated, with the most amount of rules. It actually starts with the first candle in the trend series to make an MRI top. But you don't begin until after the trend completes. So you need that MRI top, but then the counting for extension C goes back to the first candle of that trend series, which does have 9 candles in it. It does not need to be consecutive, just like the other extensions, but it has lots of rules. The close has to be greater or equal to the high 2 candles earlier, which is the same as extension B. The close also needs to be greater or equal to the close of the prior candle. The high is also supposed to be greater than or equal to the high of the prior candle. And this rule number 4 is very different. The close has to be greater than the close of the prior extension C candle close. So in order to complete extension C, you always need higher closes. So the only way extension C is going to complete is on a new swing high. It has to. It has to complete on a new swing high because there's a relationship that makes sure that in order to get another number in extension C, it has to close higher than the prior number in extension C. So you're always looking at higher closes. Now, there are a slight relaxation of the rules, and I may, at the moment, this is the default, but I probably should have gave you guys a toggle because not everyone does it. So there's two versions, the strict version and the looser version. We're using the looser version where rules 1 to 3 do not apply for the last 3 candles of extension C. So candle 11, 12, and 13 of extension C only need a close higher than the prior extension C's close. It doesn't care about the candle before or the candle 2 candles earlier. In addition, rule 4 obviously can't apply to the first candle in extension C because it's the first candle of extension C, so there's no prior extension C candle to close above or below because it's the same for opposite for a downtrend. So rule number 4 does not apply to the first candle, but it applies to every candle after the first. And rules 1 to 3 do not apply to the last 3 candles. Now, the opening of the 13th candle can be used as a proxy for the close as well. So if your 13th candle opens above candle number 12, but doesn't close above candle number 12, that's okay. But if it opens just below candle number 12, trades higher than candle number 12, but closes lower than candle number 12, that's not the end of extension C. So you can only use the opening price as a proxy. I guess in Bitcoin, this would always happen because the candle following the 12th candle will always be the 13th candle. But in markets.gap, this becomes very interesting. But it has to be greater than. So it may not have to happen. So the new candle, the 13th candle, if it will obviously open at the same price as the prior candle because it trades continuously. There may be one trade in between them. So if that trade is one tick down, can be equals to, has to be greater than. Got to make sure you have that higher price trade. And finally, this is pretty much the last slide before I show you a couple of examples. Just some thoughts on these extensions. I find extension B and C to be more useful in identifying tops, while extension A is more useful in identifying bottoms. But I don't want to make it sound like extension A is more useful in identifying bottoms than B and C. It's just more useful in general. And the reason for that is because markets fall very, very quickly. And extension A is usually the first to complete. Though if you are falling very, very quickly, extension C will be the first to complete because it starts earlier. Extension A can't begin until the 9th candle, but extension C can begin with the first candle of the trend. It's ideal that an extension completes around the same time as another MRI trend completion. So whenever I see the end of an extension around an MRI top, that makes it a very, very interesting situation for my trading. Extensions are canceled when there is an MRI completion in the opposite direction or the price has fallen below the support resistance line. We're going to talk about the support resistance line later in this workshop. So you can't have a bullish extension and a bearish extension at the same time. The A, B, and C are either counting up or counting down. They're either in a downtrend or in an uptrend. So if there are extensions A, B, and C going on to the upside and you get an MRI bottom, all those extensions immediately cancel. And now they start to be created for more downside. That means you can have multiple extension Bs at the same time, or multiple extension Cs at the same time. And obviously you have A, B, and C running at the same time always until one of them completes. There is technically no limit as to how many there can be, and the ones that start later can complete first. That's also important. You can have multiple extension Bs happening at the same time, and the one that started 30 candles later can be the first to complete versus the one that started 30 candles earlier. They are all independent. Now, there are limits in TradingView where I believe if the third or fourth extension completes first, it tends to have issues with the code, but that almost never happens. It's an incredibly rare situation. I've only seen it once in the years that I've been working with this indicator. It's up to a trader to decide if they want to base a trading strategy on the trend or extensions or both. So here's an example of these extensions. So right here, you see the completion of extension A, C, and then B. You then have another MRI top. And you can see how this MRI top kicks off a new set of extensions. And in the indicator, you can display the details of what is going on. So you can also see right here, there is already an extension C that has not completed. When this extension C completes, there is a comma 1, which means there is another extension C happening. And right here, it tells you where in the count 213 that extension C is. It's on the 9th candle of 13. Here, we complete an MRI top, so we start extension A, extension B, and extension C from this MRI top. And you can see how on this candle, you have extension A, extension B, and extension C. A is on candle number 1, B is on candle number 1, C is on candle number 10. But there is another extension C in the back. That's what the comma 1 is. Tells you that there's one more in the back, because that could be 2 more in the back or 3 more in the back. Here is extension A goes to number 2, extension B goes to number 2, but look, there is no extension C. Why is there no extension C? Well, remember the 4 rules. The 4 rules of extension C. Close is greater than or equal to the high 2 candles earlier. Close is greater than or equal to the close of the prior candle. High is greater than or equal to the high of the prior candle. And the close is greater than the close of the prior extension. So if we go back here, here is the close of this candle. Clearly, the close is higher than the high 2 candles earlier. That satisfies extension A and extension B. In order to satisfy extension C, you need a close higher than the prior candle's close. That didn't happen. You need a high higher than the high of the prior candle's high, which did happen. So C satisfied 2 conditions. A close higher than the high 2 candles earlier, a high higher than the prior candle's high, but the close of the prior candle's close was not higher or equals to. But the biggest one is the close was not higher than the prior extension C's close. So we needed to close above this candle for 2 reasons. One, to satisfy the prior candle condition, and the second reason, to satisfy the prior extension C condition. Now, let's look at this candle. Oh, see, this is very interesting. This is a very interesting case. Huh. At first glance, I thought there was a bug, but there is no bug. This is a very interesting situation, guys, especially to those that traded the prior indicator. I didn't even want to get into these intricacies. Notice how this candle does not have extension A or extension B. Because in order to get an extension A, the high of this candle needs to be greater than or equals to the high of the candle 2 candles earlier, and it wasn't. It's hard to see on this picture. Is this high greater than that high? But the fact that there is no extension A tells you that this was lower. So if the high didn't even break the high, how in the world is the close going to be higher than the high? It's impossible. So extension A and B are not satisfied with this candle. But extension C can't be satisfied either, because that condition is the same. The condition for extension B is that the close needs to be higher than this high, was also not satisfied. So there should be no extension C. But why is there an extension C? But that's because the extension C is not satisfied for the one that's in the back. This comma 1 means that there is another extension C in the background. It's the background extension C that did not satisfy the condition. But the front end extension C, because it entered its final 3 candles. Remember, rules 1 to 3 do not apply to the last 3 candles of extension C. And that is why there is a C11 here, because we entered the last 3 candles of an extension C from an earlier MRI top way in the back. And therefore, all we needed was a close higher than this candle's close. And we didn't have to satisfy the other conditions, like closing higher than that candle's high, or trading higher than the prior candle's high, though we did close higher than the prior candle's close. But all we needed to do was satisfy a single condition: close higher than the prior extension C's close, and we did. Anyway, you can, I don't want to spend too much time on this slide, but you can see where extension C ends. Extension C finally ends right here, because you always have to close higher. You would not get extension C number 12 until you closed higher than the close of this candle. So you just extend this line, and you can see how right here you finally had a new high close in this trend. And this is where extension C gets number 12. This is where extension C finally completes, because the close was finally the ultimate close. In fact, the open was as well. The moment this candle opened, extension C was completed. But there is one more in the background. And that's why right here, you see that the extension C that started from this MRI top is only on candle number 7 right here. But now there is another one in the back, because we created another MRI top. This extension A completed from this MRI top. This extension B completed from this MRI top. But this extension C is not from this MRI top. It's from an earlier MRI top. This MRI top is only on number 7 out of 13 here. But this MRI top started new extension A and new extension B, which you see happening right here. And this is where this indicates the math starts to get very confusing. This is a second consecutive MRI top, which we're going to talk more about in detail very, very soon. Now, what you have to realize, another intricacy here, is that a second consecutive MRI top does not initiate any extensions. That is why on this candle here, extension A was on number 8 and extension B was on number 8. And this candle, extension A is on number 9, extension B is on number 9, but there's no comma 1, because this MRI top did not initiate any new extensions. Extensions can only be initiated from an MRI top with a 1 on it, the first consecutive top. This is a second consecutive top, meaning that this is a relationship of 9 consecutive candles that close greater than or equals to 4 candles earlier. But this red 2 means you had 18 consecutive candles that closed greater than 4 candles earlier. This A plus means that this would be the completion of extension A, but we did not satisfy the condition of trading higher than the close of candle number 8. So if you go back, here is candle number 8 in extension A. So until we satisfy the condition of trading higher than the high 2 candles earlier, and also trade higher than the close of this candle here, looks like August 27th, it will stay as an A plus until that condition is satisfied. But now we have an MRI bottom, and this MRI bottom cancels the extensions, and that statement has a little bit of an asterisk to it, which we're also going to discuss later on in this workshop. Okay, so one more example, this time to the downside. Here is a candle that completes extension C and B from an earlier MRI bottom. Here is extension C completes. A lot of extensions are completing. Here is an interesting candle where that is an MRI bottom and also the completion of extension B, which gave you a very nice week of upside, huge percentage gain here. This is about $18, and the close that week was about 25. So this certainly helped. Not every trade is going to be successful, guys. Ignore the stars for now. We're going to talk about those later on as well. A lot to unpack in this indicator. It's very challenging to describe it. This MRI bottom kicks off extensions. Now, we are limited as to how many numbers we can display going backwards. But right here, you can see this is number 6 in extension C, and this is number 5 in extension A, and the condition for extension B was not satisfied because you needed to close lower than the low 2 candles earlier. But you only needed to trade lower than 2 candles earlier. So that's why condition A is satisfied, but not B and C. We're going to talk about the orange arrow later on as well. This is just an example of extensions. I probably should teach more in detail after I teach the trend phase. Here we complete extension A and C from this MRI bottom. But we don't complete extension B until we get all the way to here. And you can see how we got to extension B12. But in order to get the last one, in order to complete extension B, you needed to trade lower than the close of candle number 8. And candle number 8 is right here. So until we traded lower than this line, which happened right there at the edge, extension B could not complete. But here we made a new MRI bottom, which could have reversed the market, but it also creates the extensions. And right here on this candle here that had extension A and C complete, there was a huge rally. Now, earnings and a split certainly helped, but it was nice that it was in line with 2 extensions on the same day for about a 300% rise in 2 weeks. And this is Aurora Cannabis. So this is how you can see what the extensions are doing. And this is an idea of the math behind those extensions, which you may or may not be important to you for your trading. Okay, that is it for the presentation. But now we're actually going to go to TradingView and we're going to go through all of these. Okay, we are done with a little presentation that talked about the math that was needed. And now we could just go ahead and exit the slides. And by the way, I am assuming that people have their introduction to technical analysis all set, and you have either taken this workshop or know the content of this workshop, learned somewhere else. And also you have good risk management strategies, again, either by taking my workshop on risk and position management or learned those skills elsewhere. The options trading skills are not necessary for this at all. Okay, so what's our next step in order to understand the MRI? In case some people didn't do it, I think this is the best way to go, is to just walk through the charts that I put together as release notes for the MRI indicator. And let's go through it because this has some of the other details. Let's start with the most important thing on this chart. And you can find this by going to the script that I released. So this is the MRI, and you can read about it here. But I already described all of this part. Let's go to see what's on the chart. So these red arrows with a number above them is an official MRI top. If you have a green arrow, that would be an MRI bottom, but it's the same concept, just in reverse. Now, there are two ways to get an MRI top, and one of those ways will not kick off extensions. So remember, extensions do not get kicked off if the number is a 2 or a 3 or a 4 or a 5 or a 12, though I've never seen it that high. I have seen a 5. That's 5 consecutive. In this case, we had 3 consecutive MRI tops, which means the relationship of closing higher than 4 candles earlier was maintained for, so it's 18 plus 9, 27 candles. An MRI top, as you can see right here, if the candle that makes the MRI top satisfies the last condition, I should have probably made it a little bit clearer. Just like in completion of an extension, you can use the opening as a close for the proxy. When it comes to an MRI top, as long as it trades at some point above the close 4 candles earlier, there will be an MRI top there. So there is a special condition. I should probably add that to the slides, and I'll do it for next time. Sorry, guys, my first time teaching the MRI, so I will get better at this. The MRI top will only kick off the extensions if it actually closes higher than 4 candles earlier or equals to. But if it only trades higher than 4 candles earlier, but doesn't actually close equals to or greater than, there will still be an MRI top, but it will not kick off the extensions. So it has to properly complete the trend phase in order to kick off the extensions. So right here, this MRI top did kick off extensions because the close was clearly higher than 4 candles earlier on the last candle. If we just go back, if this is candle number 9, 8, 7, 6, 5, 4, 3, 2, and 1, and this candle kicked it off. Now, you can display numbers under each candle, and I'll show you that in settings when we get to that part. Okay, but right now, I just want to describe all the parts of the MRI And then we're going to open it up in TradingView where I will literally walk you through every setting. So you get this red arrow and the number on top based on how many consecutive MRI tops you have. What does this orange arrow mean? The orange arrow is a warning arrow. The orange arrow shows up the one candle prior to an MRI top, but this indicator doesn't do revisionist history. The orange arrow shows up to give the trader a warning that this is the 8th candle in your trend, and the next candle will most likely create an MRI top. If the next candle does create an MRI top, the orange arrow goes away. And that's why there is no orange arrow on this May 28th candle or this July 10th candle or this August 7th candle. But if the relationship was broken and you never got that MRI top, the orange arrow remains as that warning arrow. So when you get that orange warning, it's something to pay attention to. And you may or may not want to exit the trade, but at least you are notified if you are looking at one of your assets. Now, the orange arrow will still show up on this candle prior to the second consecutive MRI top, and on this candle prior to the third consecutive MRI top. The orange arrow does show up and then goes away. Now, notice this here, this third consecutive MRI top, the candle crashed, and this candle did not close higher than 4 candles earlier. That would have been this one here. But the MRI top remains, because as long as it trades higher than 4 candles earlier, the MRI arrow does show up, because it's a warning sign that the trend can reverse. Well, this is just a description: trend extensions A, B, and C that follow MRI tops. So sometimes it's hard to just envision which extensions belong to which MRI tops in a trend, but they are all warning signs that it's possible for that trend to end, and perhaps it's time to take a little bit of profit. Now, in a very strong trend, obviously things can continue, and we will talk about those stars that can potentially help you get back into the market. Now, let's talk about what else is on display here. We have these green dotted lines and red dotted lines. These are your resistance and support lines. Let's talk about the math that creates these lines. We'll use the green. So if this is an MRI top, a support line from this trend is basically the lowest price that was reached during this trend into an MRI top. Unfortunately, TradingView does not allow us to draw it back to the first candle, but it was right here. This is the lowest price. So this is the first candle in the trend, second, third, fourth, fifth, sixth, seventh, eighth, and you can see where the MRI top comes in. This green dotted line is the lowest price in this trend. Now, it could also be the closing price of the prior candle. So this is kind of the tricky part. Notice this green line. So if this is the first candle in your trend, the lowest price happens to be the bottom of that candle, but your support line is all the way down here. That's because if the trend began off a gap, then the support line is actually the closing price of the last candle before the gap. So keep that in mind as well. So this is the lowest price of this trend phase, or the prior candle's close, whichever is lower. is your support line. And it's the opposite for the resistance line. Okay, hope that part is very clear. Now, there is also this blue line, which I refer to as a breakout line. I will most likely adjust the math of this line. I've been looking at this a lot over the years, and I feel that, I mean, we're already gathering statistics, and I feel that this line is too far away. I feel that this line should definitely be brought in closer, but I'm still working on a good math rule set that would help in that trading. So for now, I left it as it was in the old indicator, and I refer to it as a breakout line. So what is the current math of the breakout line? You can see it here. You can also see it here. Let's use this one because it's the one that's labeled breakout line. So this breakout line is coming from this MRI top. And it's established by identifying the candle that made the highest swing high in your trend. And then you add to that swing high the range of that candle. So if this candle, this is the chart of the S&P, and if this candle was 50 points from top to bottom, you would add 50 points to the top of that candle and establish the breakout line. The breakout is exactly what it sounds like. The break of this line, ideally on the closing basis, is an indication that the price will most likely go significantly higher. We can see the break of the breakout line here, and the price went significantly higher. We can see it here. Price went higher. We had another line that was very, very tight, very close. This is how I like to see it. The break of this line immediately created another line, which was immediately broken, and then we went significantly higher still. Also notice how the support line is acting as support very nicely, and the break of the support tends to lead to significant downside. In fact, when an MRI bottom, if an MRI bottom was established here above, well, now we're going a little more into strategy. You know what? Let's hold off on strategy. Let's stick to definitions, because this is the part that will go out to everyone. What else is in the indicator? Well, we have this awesome feature of showing you higher level timeframes. The S&P 500 happens to be on a yearly MRI top, which may or may not be relevant to most people. Most people will probably find the fact that this is a yearly MRI top to be irrelevant, and you can certainly turn that off in the settings. But this is a beautiful weekly MRI top right there, which happens to coincide with a daily MRI top. And there should be no surprise that the market took a significant drop down. And I wish I can show you lower level timeframes hitting MRI tops or bottoms, but it was not possible to do in TradingView. So I can only show you higher level timeframes. We have the common higher level timeframes defaulted as, I believe the defaults are hourly, daily, weekly, monthly, and yearly. But you do have 3 additional custom timeframes you can add. I think this is it on this particular image. Feel free to add questions or raise a hand, but let me just go through these before you guys start asking more questions. Here's another picture just to simplify things. Here is your MRI bottom. And you should also see that this particular MRI bottom should not have kicked off any extensions. And the reason why this MRI bottom did not kick off any extensions, but this MRI top did, is because the last candle, the MRI bottom candle, did not maintain the relationship of closing lower or equals to 4 candles earlier. But it traded lower than 4 candles earlier, and therefore you get the notification that there is an MRI bottom. So somewhere in the bottom half of this candle, this happens to be Uber on a daily chart. So what day was this? This was this year in August. So around August 20th, around that time, Uber was notified early in the day that this could be an MRI bottom situation. And you can see what Uber did the rest of the day and kicked off an uptrend. Now, this uptrend immediately ended with an MRI top. And it had that classic, which I haven't talked about yet because this is going into strategy again, this 1 to 4 candle correction. Now, this MRI top certainly kicked off extensions to the upside. But notice how extension A ends right here. And it should be obvious that this extension A is not coming from this MRI top. It's too soon. You need at least 13 candles. And they don't have to be consecutive. But the earliest extension A can complete is 12 candles after an MRI top because it can start on the MRI top candle. But the best case scenario for an extension A completion is 12 candles following an MRI top. So this extension A must be coming from an older MRI top. And the next question you may want to ask is, but Tone, didn't you say that an MRI bottom cancels the extensions? And you may think that's a contradiction, but this particular MRI bottom did not close the candle lower than 4 candles earlier. And therefore, it did not meet the cancellation condition of the extensions. Another way to cancel the extensions is to fully trade below the support line, a full candles range below the support line, which it also did not do. So there are extensions in the background here coming from older MRI tops. You can see right here that we had an MRI warning, but because this candle never traded higher than 4 candles earlier, we never completed an MRI top, and we actually reversed 1 candle early. And you can read my commentary as well, guys, and please do. It's very, very important that you read my MRI release notes. So let's take a look at this. This is the chart of CBOE company, which is the CBOE, the same CBOE that runs options and futures. There is the CME and there's the CBOE, the 2 big companies. This is a weekly chart, so each candle represents a week's worth of time. And I did not believe it until I saw it, where on a weekly scale, over a 9-month stretch of time in 2008, this stock made 5 consecutive MRI tops. And it's kind of like a pressure cooker, where with each MRI top, the probability of a catastrophic crash starts to increase. And you can identify if you did decide to sell or short off of each of the first 4 MRI tops, the break of the breakout line should certainly be useful to you because it can at the least get you out of a bad trade or get you back into the right trade, which was more upside. Now, like I said earlier, I will slightly change the math on these breakout lines to make them a little tighter. I'm still working on that math. Lots of work to still be done. And right here on the 5th MRI top, the stock fell 30% in 2 weeks. Huge correction. Took out half of the upswing in 2 weeks. An upswing that took 9 months was 50% of it was erased in, well, more than 50% by price because if we look at where this started, the starting point was right there. The lowest price was at approximately, say, $80. And we went up to 140, and then we fell to 96. So we actually eliminated like 80% of the move in 2 weeks, but 40% of the overall stock price. So you really want to pay attention to these consecutive MRI tops. Along the way, you can see that we had a monthly MRI top here in line with the weekly, and it was not enough to reverse the trend. But oh boy, did it reverse with a vengeance on the fifth MRI top. Now, this could have gone further to the sixth, or it could have reversed on the fourth, or it could have reversed anywhere randomly. We don't know what the future holds. But I found it fascinating that it happened to be one of the MRI numbers. On the way down, of course, we made an MRI bottom. And also this here, there were no extensions all the way up because, as mentioned earlier, extensions only begin with the first MRI top, and if that MRI top candle closes greater than or equals to 4 candles earlier. So these extensions A, B, and C were all completed here, and there were no more extensions on the way up. Here's an MRI bottom. This MRI bottom kicked off extensions to the downside. And you can see how the resistance line from this MRI bottom is the highest price of the 9 candles that make the MRI bottom. And it happened to be the top of this candle here. And there's your line. And this line was not broken. It actually rejected the price. We would have needed a full candle to be above this line in order to cancel the extensions without making an MRI top, which would also cancel the extensions. We completed extension A here. We created another MRI bottom, which also kicked off another set of extensions. Extension B from this MRI bottom completes here, and I'm not sure what the rest of the history of the stock does. Also, this here shows you that we have a monthly MRI bottom in line with this candle that kicked off a nice trend, because these are weekly candles. So each candle represents a week. So this happened in, say, February, early February, and going into October, that's 9 months. Early February to October, and there you go. So this was straight down, creating a monthly MRI bottom. Next picture. And this is the description of what that picture represents, but I don't need to read the description. I'm sure I can figure out what I wrote when I did that. So this is a picture showing you the extensions and how they look. So this is extension B and C happening at the very top of Amazon daily chart this year, September 2020. And in the first few days of September 2020, Amazon tops with extension B and C. Now, these extensions B and C are coming from which MRI top? It's coming all the way from this MRI top, because as you can see, how can you figure out why this one and not this one? Well, a couple of reasons. Obviously, this kicked off the extensions because the close is higher than the close 4 candles earlier. 1, 2, 3, and 4. So this MRI top properly completes and kicks off the extension phase. Here is another MRI top. Did this one close higher than 4 candles earlier? 1, 2, 3, and 4, and it did. So this also would have kicked off extensions. But it's obvious that extension A can't possibly complete this early, because you need at least 12 candles after the MRI top if the top candle itself this would not have been extension A qualified because you need a high higher than the high 2 candles earlier. Didn't happen. So extension A can't come this early. Extension B, are there even 13 candles from here to there? Assuming everything was right. Well, we know this candle doesn't satisfy the condition, and this candle doesn't satisfy the condition, and this candle doesn't satisfy the condition because you need a close higher than the high 2 candles earlier. This one might. So this is the first candle of extension B you can possibly have. And then it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And in a perfect world, if each of these candles was closing higher than the high 2 candles earlier, we could have done it, but there's no way, because you can see right here, this candle or this candle, and even this candle, they don't satisfy the condition. Neither does this one. And neither does that one. So all of these extensions are coming from there. Now, you can display the numbers to help you, but also you may not need to. And one of the things I wanted to do is create a clean indicator, because some people don't need the numbers. They just need to see these things happening. If you really want to know where it's coming from, it may not really matter, but you can easily tell that it's not coming from the last one, and it's coming from the earlier one here. But there's always something to keep in mind. And when you get to this extension C and B at the very top, you may want to pay attention to a potential trend reversal. You can also see how these particular daily candles were in line with a weekly top on the MRI. And these set of candles were in line with a monthly top on the MRI. So knowing that you have a monthly MRI top, and we probably came very close to a daily MRI top here. Probably this next candle probably would have been the warning candle. We were close, and the market reversed and went immediately into an MRI buy. And this is a very recent chart. This next chart, well, why do I have it? And here is a weekly chart of GM topping on extension C with the MRI warning orange arrow. Extension A and B also provide good profit takes after a big run up. So the reason I chose this particular chart, well, a couple of reasons. One is it shows you how when you have extensions in the vicinity of MRI tops, and the same goes for bottoms, it's something to really pay attention to. This is GM early on this year, going into COVID, weekly chart. And that's also a beautiful reversal candle, which is important to me. I love seeing reversal candles in line with extensions or MRIs. When it comes to extensions, I really want to see an all new swing high, whether it's all time or in recent history, or bottom if we're going in the opposite direction. These extensions A and B are decent profit takes, but look how bullish these candles are. And this is a consolidation, and this is a break of the breakout line. So there's not much here to get you panicked into selling everything and potentially going short. But look how different this is. You have a reversal candle, and then you have an MRI warning, and then you have a bearish candle, and the following candle gaps down. And then the stock falls almost 50%. But the whole market fell. COVID certainly didn't help. Also, look at this support line. Look how it goes through the middle of this candle. And that's because in order to cancel the support line, you need a close below that support line. This closed a few cents above. And this, while opened below the support line, not closing below the support line, keeps the support line intact. This is the candle that eliminated the support line. Okay? And since we never had an MRI top, there were no extensions created to the upside off of this orange arrow. But if there were extensions to the upside, this candle is probably the one that would cancel those extensions, since there is no MRI bottom to cancel the extensions. You need a full candle below the support line. Next picture. Let's see what my comments are. These extensions are particularly useful when they occur on or right around an MRI top or bottom. Here's an example where it timed the 2018 stock market top perfectly, leading directly into an MRI bottom 2 weeks later. Also notice how we can show multiple time frames hitting MRI levels. So this is a really good chart. And we're going to go back to that presentation I did earlier. So this is the S&P 500 top on January 26th, 2018. I really wish this thing showed the date, but it doesn't. But this is actually the same candle that I referred to earlier in the presentation. This is that candle. This is the February 26th candle that I mentioned earlier. That did not look like much of a concern for one of the best traders I know of the TD sequential. It did not look concerning. And this is why the MRI is different and unique. And I already had these things at the time in 2018. So while the traders of TD sequential were looking at an 8 of 13, what I was looking at was a second consecutive MRI top, which does not exist in other indicators that may resemble this. And it was the end of extension C on the same candle. So I was already warned twice on this day that the market has a potential of topping. And there was no COVID here. This is not 2020. This is 2018. 2 years ago, 2.5. The next candle is known as a Harami candle, which is not a bullish sign at all. Then we had a down gap. And then the market just tanked. And ironically, it had a beautiful bottom right on an MRI buy. And this day, this sequence really told me that I'm onto something. And this is before the name MRI existed. And it does stand for Momentum Reversal Indicator. But I already knew that I had something different and unique to identify a critical top. And to me, a second consecutive or a third consecutive are even more interesting than the first consecutive. Though first or just first. Though the first is the one that kicks off the extensions. Now, the second consecutive MRI top will never coincide with extension A or extension B. It's impossible because they need a minimum of 12 candles following the MRI candle. Minimum, which is very unlikely. You need to constantly make higher highs and higher closes. But extension C, because it had a chance to start earlier in very strong uptrends, you can have this situation where extension C happens to close exactly with a second MRI top from the first MRI top in the 18 consecutive candles of the closing relationship of 4 candles earlier. Okay, and here's the rest of this chart. Notice the break of the resistance line leading into an MRI top, which on a daily scale happens to be inside the weekly MRI top. So this is another example where an MRI top, just like this second consecutive MRI top, is putting you more on notice. This first MRI top is putting me critically on notice because it happens to be inside a weekly MRI top. And weekly is always more important than daily. yes, there was an MRI top here that only led to consolidation, and there was an MRI bottom here that was preceded by extensions A and B. Now, these extensions A and B are clearly coming from this MRI bottom. There's no other place they can come from. Now, extension C from this MRI bottom never appeared. And it was canceled not by this candle, because in order to cancel the extension C, your MRI top does need to close higher than 4 candles earlier, which this clearly did not. Maybe not clearly, but it did not. It might have, but this one would have done it as well. But it's a challenge to get extension C to the downside, because for starters, you can't have an extension C on any of these candles, because the moment this candle occurred, the only way you would get, and remember, extension C starts up here. Once you get this, and it kicks off your extensions, extension C could begin with the first candle, and it probably did. It clearly did. So this would be, say, maybe a 1 on extension C. That's a 2. That's a 3. This one won't work. That's probably a 4. But right here, you have a very low close. So you cannot have another extension C until you close lower than this point back in early February. And this one may or may not have done it. Probably not. This one maybe did it. So this is your like next extension C number, like number 5. And then it never closed lower than that again. So extension C had no chance. And extension C gets canceled. If it didn't get canceled here, it actually got canceled over here when we broke the resistance line fully. And if it didn't get canceled there, because if this didn't break the resistance line, it would have been canceled by this MRI top. Assuming, of course, this MRI top closed above 4 candles earlier, which I believe it did. And you can see it, all of these things with the details of in the settings, which I will show you very, very soon. And oh, by the way, and this extension A is coming from this MRI bottom, which never got to an extension B or C. So there were 2 C's in the background that never completed, and there was 1 B in the background that never completed. Let's see what the commentary is. In addition to extensions, an MRI top or bottom generates a resistance and support line and a breakout line. So this is where I described the things I mentioned earlier. The support resistance line not only has a tendency to reverse the price, but also increases the probability of the MRI leading to a full reversal if the line is not broken. I'll explain that. By breaking this dotted line, you increase the probability of entering the extension of trend. I'll explain that as well. The breakout line tends to notify the trader that the trend is very strong and continuing. As an example of the support line, here is a recent 1-hour Bitcoin chart. I had to put in like a Bitcoin chart of something. So this is, I don't know what month this is, but it was a very recent chart when I published the indicator a few weeks ago. So here is an MRI warning, which happened to in line with the reversal of the price of Bitcoin. As Bitcoin fell from 11,000 or just under 11,000 down right into the support line from an older, there was no MRI top since then. That's why it's the last line. You can see how this is the hourly chart, and you can see how many times this line was able to support the price of Bitcoin. And we got an MRI bottom right without breaking this support line. And when that happens, usually, but remember, guys, the MRI is more useful on daily charts and weekly charts than on hourly charts. It doesn't mean that it's not useful on hourly charts. It just means that daily and weekly is how it was actually designed. But it does work across all time frames and all assets for usefulness in trading. This MRI bottom had a higher probability of never completing its extensions and actually reversing back to the upside than if it occurred below the support line. If this MRI bottom came below the support line, it is more likely that it would only reverse for a short amount of time and then enter the extension phase. Here is the extension A and B completing from this MRI bottom. Now, we didn't fall any lower, but we just consolidated. But here is a big break of the MRI support line. And it beautifully gave you an MRI bottom, which really nicely reversed the price. Now, I'm not going to be hypocritical here, saying that because we had the MRI bottom below the support line, the probability that the trend was going to keep going down was actually higher. But just because the probability is higher doesn't mean it's going to happen. And this came as a beautiful reversal to the upside. We broke the resistance line on an MRI. There is no reversal candle here. See, at least you can say that this candle here was a reversal candle. And this reversal candle came in the vicinity of the MRI, which makes me a lot more bullish than this situation makes me bearish. Same thing here. You have a nice, it's not exactly the perfect reversal, but you do have support and you do have these long bottom shadows. So this situation makes me more bullish, relatively speaking, than this makes me bearish. Or this makes me more relatively bullish than this makes me bearish. And though, to be honest, this here is not screaming sell to me either. Yes, that is a reversal candle, but this is also consolidation. And to me, consolidations at the top of a trend is a higher probability of more upside. So this is a very neutral situation where this shooting star candle is telling me that the environment is bearish, but this consolidation is telling me that the environment is bullish. This MRI warning is a potential tiebreaker telling me to be very, very careful, and down we go. All right, so what is this chart about? Let's read the description. The euro-dollar exchange rate as of today, or my posting date, daily chart shows extensions of trends once these critical support resistance breakout lines are taken out. Okay, so let's go take a look. Here, we have a resistance line, which acts nicely, but the more times you hit the resistance line, the more likely you are to break resistance. And here's a beautiful break of resistance that leads right into an MRI top. This is the daily chart of the euro-dollar exchange rate, and the date range is September 2020. Here we have a very far away breakout line. And this is what I mean in that I'm not a fan of these breakout lines being so far away from the MRI top itself. So I will be adjusting the math slightly to bring this down. But there's no reason to wait this long to identify your breakout. This could have been done back here, and the future math will adjust it. And here we have an MRI top, which leads to extensions A, C, and then B. They occurred in that order. So these are the final extension completes from the MRI top on June 8th. So this is the June 8th MRI top, and these are the three extensions that were completed. But right here, we also break the breakout line, giving you confidence and more upside. We created another MRI top, which kicked off another set of extensions. We then went into a second consecutive MRI top, which did not create more extensions. And this is the cluster of the three extensions that completed from this MRI top back in July. Now everything is complete. We had a second consecutive MRI top. We have completed all extensions. There is nothing. MRI is basically giving you nothing at this point. Yes, we made a slightly higher high on a reversal shooting star candle, and this might not have been a very profitable trade off this high or this high. And of course, you could have panicked over here and exited with a loss. But it did not go much higher. We did pull back. We did not break the support line. We created an MRI bottom. I just literally snapped this in real time. And we can remind me to go and take a look later how the euro is doing. This looks like the end of September when I took the screenshot. And we're already on October 10th. So this would have been around September 25th. So I'm really curious how the euro did. But was I bullish on this day that I took the screenshot in the euro? Of course I was. Okay. And all of that would go out the window if we go below 1.160 because we're so close to all this support. Now, there was also a weekly MRI top right with the high. Another beautiful example. You can also watch the weekly numbers, the weekly counts, and you can see how we had the top right there in line with the weekly chart. The indicator also shows you if the MRI is hitting critical levels on higher level time frames. We have set the defaults to hourly, daily, weekly, monthly, and yearly. You can turn these off in the settings. Okay, so this just me highlighting the higher level time frames display. And by the way, I know it looks like I'm all over the map with these examples, and I'm not cherry picking them. Someone can look at this and say, well, of course you have FX and cryptocurrencies and commodities and stocks. And this is Titan is actually an Indian company and it trades on the Indian exchange. And yes, if you have 18 billion assets to choose from, you will always be able to cherry pick the perfect MRI examples. But I was looking at it from a different perspective, as in the MRI is useful on any asset of any market and technically on any time frame, though I prefer daily and weekly. So I'm not exactly cherry picking Indian stocks. I'm more showing you that it does work in the Indian stock market. And my original developer, well, actually my second developer of this code was a gentleman from India. And he was volunteering to do this code because he was a very profitable trader. He was more than doubling his salary in India, which in his case was actually not terrible. He was working in the tech sector. By Indian standards, a high-paying job, not by US standards, but by Indian standards, it was a pretty high-paying job. And he was able to double his annual income by trading what is now the MRI. And he was more than happy to code it for me because it was so useful in his trading. And all he can do is trade the Indian markets. And this was one of his best trades. He shorted the hell out of Titan when it came to a daily MRI top, where a few days earlier it had a weekly MRI top, and this day was the third day of a monthly MRI top. He nailed this short trade, and as it dropped 25% in 5 days. And he did the same exact thing on the Indian rupee, not at the same time, not on the same day, but that year, this is 2019, last year. And last year, he nailed 3 of these. This was probably his best of the 3, but he also sent me that he was shorting the Indian rupee in October, I believe, of last year, because it also had a daily and weekly and monthly MRI top all at the same time. This one wasn't exactly at the same time. The week ended and then the monthly started. But in his rupee trade versus the dollar, and in his shorting the banking sector in India, or shorting a single bank in India, I don't remember, I have the chart somewhere. He had daily, weekly, and monthly all on the same day, on that day, and he just took those trades and he did incredibly well. Also see how the beautiful reversal of the extension B right into an MRI top right there. Now, this also would have been a decent potential shorting opportunity. It would have been 1 week ahead of the weekly top. It would have had the warning orange arrow on weekly, and it also would have had the orange arrow on monthly. But of course, if you did not set that break-even stop loss, you would have to get stopped out, and then you get one more chance. Okay, that's an example of multiple time frames. Next, let's look at gold. The recent top came on a Friday, which had a daily extension BNC. The following Monday kicked off a weekly MRI top, and a week later was the start of September, which happens to be a monthly MRI top. Gold is still trending lower as of today and is down 11% since this top less than 2 months ago. So this is the current chart of gold, or current as of the end of September when I put these graphics together. We're only about 20 days since. We're October 10th today. And this is end of September. And you can see how the extension, I would have loved to see this go to the second MRI top. We're only a few candles off. Because remember, this is the first, 1, 2, 3, 4, 5. This was the sixth. And this seventh actually maintained the relationship. This was that eighth candle in the series that like took it out. So we're only a few candles shy of getting the MRI tops. But right here we top with extension B and C on the same candle. That happens to be 1 day before the weekly MRI top, which happens to be a few weeks before a monthly MRI top. So you have warnings. The weekly had an orange arrow and the monthly had an orange arrow. We topped. This could be on that day. I'm not sure. It's hard to draw a straight line down, but I think it was 1 day before. So these B and C extensions are ending on a weekly orange arrow down and a monthly orange arrow down, giving you plenty of warning signs that gold is topping. And it's now been over 2 months and we are still down. We're down, well, actually we're back up to 1900 now, but still significantly lower than the top. Still about 10% lower. Okay, next, what is this? Oh, this is the same chart. This is gold. So this is that weekly top in gold. Yes, so maybe we can look at it this way. So here is that CB candle making this very top. And then the next candle is the MRI weekly top, which started with this candle there. And here's the monthly look. And this was that weekly MRI top, or 1 day before. And this is the monthly drop for the month of September. And October, we're starting to recover a little bit, but we'll see where it goes. Okay, on a final note on multi-time frame is that if you have the hourly set to display on a chart that only has end of day data, the indicator will not work. Okay, so that's a warning. If you are looking at an asset that only has end of day prices, the default does have the hourly time frame for a higher level time frame. But if your data isn't coming in every hour, the indicator will not work. So we have to decide, do we want to remove the hourly from being a default in future upgrades? And we probably will, because people will get confused. And you're looking at a chart, and I'll show it to you. It happens here. It happens in the BLX index. See how my MRI is now working? And that's because if I go to settings, you can see that the multi-time frame hourly is turned on. And it won't work as long as it's turned on the hourly, because there's no hourly data. It's only end of day data. So I have to turn it off. And now the MRI can work. So it might be better to have this as a default scenario so that the indicator always loads. Anyway, we'll get to the settings right after. I only have like 1 or 2 more pictures left. I wanted to throw a shitcoin on here just to be fair, and also show that it does work in the altcoin space. So here's Binance Coin that had what chart? This is a daily chart of Binance token. And here is the MRI top on the Binance token earlier this September. and we dropped 25% in a week or so, and right into an MRI bottom, and we fell 25%. I know some people took that trade. Here is Bitcoin once again. Here's the MRI called the time period around the big crash in March. So this is February, and you can see how the top in the MRI came perfectly. And there were videos of this, of me pointing this out. The MRI was pretty much the high in February, early this year. And we went down all the way to $4,000. But of course, this was mostly COVID. Breaking the support line was also key. The bottom, didn't time you at the bottom, but it was still a good trade to the upside. All right, what else do I have? Weekly volatility. So this is the VIX. This is the VIX during COVID. And you can see how the VIX skyrocketed from as low as it's been in years, from about 15. This is the weekly chart. Tops right with the MRI weekly. Bottoms with the MRI weekly. Doesn't go very far up. Does make a new low. And then again, pops on the MRI weekly. I wonder if I have the VIX daily as well. I do. So here's the VIX daily during that time span. And look, that prior, I have to zoom this out a little. This MRI weekly is actually indicated right there with these W's, because during that week was also an MRI daily. So this is the VIX. So this is another sign that your stock market volatility is at its absolute peak, where the VIX tops on a daily MRI top within the weekly MRI top. I really love seeing multiple time frames in the MRI lineup. This led right into an MRI bottom, did not lead to much upside, unfortunately. These are the extensions. This is the end of these extensions from this MRI bottom. It then gave you another MRI bottom, which wasn't ideal, never did break this breakdown line. See, the break of this breakdown line took you significantly lower. Like I said, I am considering maybe we can have a toggle button, the original formula, and I already see the comment. We can have a more aggressive version of the breakdown line and a more relaxed version. Here's another MRI bottom. Here's a weekly MRI bottom, and that leads right into a daily MRI top. So this is a little bit of a conflict here. You have a nice buying opportunity on a weekly chart, but the smaller level time frame, which is less critical, is telling you to take that profit if you trade the VIX, which few do. It's very risky. A few more charts. Last two charts, guys. Here is the US dollar index. Just the current look at the dollar at the time of this publication. You can see how it tops on extension C in March and seems to have bottomed with the MRI in late August. So this is the weekly chart of the US dollar. And here is the top of the US dollar in, what's the date here? This is the COVID crash. The US dollar had its peak, and the US dollar has been in a major decline, dropping over 10%. And it seems to have bottomed right on the MRI weekly, making a low. And we have to take a look at it today to see if the US dollar is, starting to go low again or going higher. And finally, we have one more chart. So here's Starbucks going into the year 2020. So here's Starbucks in consecutive candles. You had a extension C top with an MRI top. Inside, coming right off a monthly top within a yearly top. So at the back in August, weekly chart, we have a weekly top where we had a monthly top. Well, it was several weeks earlier. That probably didn't really help you much. But lots of things are happening here. Still does a nice job marking the top. Nice rebound off the MRI low. right into an MRI top, right into an MRI low, and it continues rising into an MRI top. This was today. So this is the recent chart. So this is an MRI top about 4 weeks ago or 5 weeks ago in Starbucks on a reversal candle, though not a perfect one. I would have rather see this candle, above $88 because now it looks like a double top. So the reversal candle nature of this is not what's making me bearish. It is more of the MRI top. Did this only lead to a 1 to 4 candle correction and higher? Maybe we'll have to take a look at the current chart. I have a good question. Do the colors A, B, and C mean anything? Well, no. It's just it matches the prior indicator with the colors. But the colors don't mean anything. It's just I'm a very color-oriented person. I like to sort things by color. And I know some people are colorblind where the color doesn't matter. So as far as all C's are purple, all B's are orange, and all A's are blue. And I could have chose different colors. So the color doesn't mean anything other than consistency that all C's will always be purple. Okay, I do want to close out with the following quote from Jesse Livermore, which is absolutely fantastic. I was recently informed and I fact-checked that he did in fact say it somewhere on the internet. And this was one of his quotes. The average man doesn't wish to be told that it is a bull or a bear market. What he desires is to be told specifically which particular stock to buy or sell. He wants to get something for nothing. He does not wish to work. He doesn't even wish to have to think. Now, Jesse Livermore was born in the 1800s. He's a very famous trader, one of the first technical analysts as well. He traded throughout the Great Depression, and he was very successful, and he also was broke as his portfolios busted on several occasions. And I think that is my favorite quote from the hundreds of quotes of Jesse Livermore. Okay. I never want to tell anyone when to buy, when to sell, what to buy, what to sell. I just want to teach you guys to do it yourself. So this is one quote that you will hear me reference often. And on my website, you will see another quote, probably here in the MRI indicator right there, by a little older, not from the early 1900s, but going all the way back to the 15 or 1600s when he said it. You cannot teach a man anything. You can only help him find it within himself. So that is exactly what I am trying to do with explaining the MRI. It's time to go to any chart and talk about the settings. We can look at the current, look at the S&P 500 or Bitcoin. Let's just go to a Bitcoin chart, the daily Bitcoin chart. I'm going to turn everything off. I am only going to look at the price and the MRI, and I'm even going to turn off moving averages. And what I want to do here is simply go through all of the settings. These are your default settings when you load the MRI. So as I click on each thing, watch what happens on the chart. This is probably what everyone that's using the older indicator really wants to know. So the first checkbox is hide support resistance lines. Okay, that is the red dotted line and the green dotted line. If you check this, you will see them disappear. So if you don't care for those lines, this is what you do. The next checkbox is hide breakout line. That is this blue line. Check it, and that line will also disappear. Okay. Now, the next is display trend numbers. This is an MRI top. This is an MRI bottom. If you want to know what these candles are in count, you can click to display trend numbers. And you can see how this is the 9th candle in that trend to make the MRI top. And here is the first candle of that trend, second, third, fourth, fifth, sixth, seventh, eighth, and that's the 9th. And then you immediately start another one. Okay, this is the same thing going in the down direction. So if you want to know what trend number you're on, that is what you do to display it. Now, we are limited to how far back we can display them. Right there. This goes back about, I don't know, 25, 30 candles. Now, I'm just going to go down the list. Right now, the default is all. What does this mean? This means that which extensions, and this is a bad chart example. Let me go back to here. This is a better asset to do this on because all of the extensions are visible. Let's do the same thing. I'm not going to hide them. I'm going to leave here. So this checkbox turns on, starts here, but because we're limited on how far back, how much, it's a trading view limitation. And these are, and you can slide this up, you know, so that these are not in the way. I have to explain what these things are first before going through the settings. This displays the trend count numbers. You can see right now we're on candle number 8, and you have the warning arrow this week. I believe this is a weekly chart. And it is. Right here, you choose which extensions. You know, I'm going to uncheck this to remove the clutter. This all means you are seeing the final candle of extension A, B, and C. But if you never trade extension A's and you only care about extension B's and C's, you would turn on extension B and C, and you will see the A's disappear. So if you never want to see A's, choose only B and C. And if you only care about B, then choose only B, and then you will not see any C's. Okay, and if you only care about C, then only turn on C. But if you care about all of them, use all. And if you don't want to see any of them, set it to none. So this just shows you the final end to the extensions. I like to show all. That's my preference. But your preference could be different. Just like you can display the trend numbers, you can also display the extension numbers. But once again, if you don't care about extension A, you can choose to only display extension B and C on where they are. And notice how, because we're only able to display like 40 or 50 numbers in total, that if you choose to display both trend numbers and extensions, you get to see less trend numbers. If I turn off trend numbers, I can see more extension numbers. These are limitations of Pine, unfortunately, the coding base. So just keep that in mind, that you can go further back on seeing extensions as you display less or more extensions. If I choose to display all of the extension numbers, I can see less of them. But if I only choose to display extension C numbers, I can see more of them. And this is where you can see where you are on every candle. So if you want to display all extension numbers and all trend numbers, this is what it would look like, but you're only going to go back about 20 candles. But now you can see that you are on the 8th candle of the trend, and you're on the 9th candle of extension A, and the prior candle was obviously an 8 on extension A, a 6 on extension B, and an 11 on extension C. And since there's no comma with a 1 or a 2, that means there are no multiple extensions of that type going on. The B plus means that you should have had completed extension B, but you did not satisfy the condition of being lower than the eighth candle. So once again, if you pull up the settings and you only display extension B without displaying the trend numbers and only displaying extension B, you should be able to go far enough backwards to see what's going on. And you can see how extension B had a close right here. So you can't complete extension B until you trade lower than that close. And that would have happened right there at the very edge, I hope. So if I take a straight line and I put it right on that edge, I would go across and it should be higher than the close of candle number 8. And you can see it's right there. It's a straight line. And if you put a microscope under it, I'm sure this traded one tick lower than that close. Or it could be equals to. You got to... there's so many rules that I kind of sometimes forget which are equals to and which are greater or smaller. But they're programmed correctly. That's the important part. So, and it really doesn't matter in this generally. I never let 1 or 2 pennies dictate my trading. So let's get back to the settings. I'll go through all of them. So you can choose what you want to display on extensions. So let's go back to not displaying. Well, let's display all extensions and let's display all trend numbers. There is also this checkbox, display higher level time frame details. Watch what happens right in this area right here on a future candle. Now, we are looking at a weekly chart, so maybe I should switch time frames. Let me make this a 10-minute chart. How do I do that? Oh, if I just do 10, it's 10 minutes. Okay, so here's a 10-minute chart of this random stock. We were waiting for the MRI to load. Here are all of our details have been chosen. We're displaying higher trend numbers. We're displaying all extension details. But now watch what happens in this empty space. When I turn on display higher time frame details, boom, there they are. So it's telling me that the daily chart is on a 2 of its trend, and the weekly chart is on an 8 of its trend, and the monthly is on a 2 of its trend. Now, I really didn't need to go to the 10-minute chart because I didn't realize we're not displaying the hourly. So say the 1 hour is probably where I want to be. What a crazy opening, by the way. So here you're looking at an hourly chart, and you're being displayed where you are on a daily time frame, where you are on a weekly time frame, and where you are on a monthly time frame. So this weekly 8 is now concerning, because if you switch to the weekly scale, you should be able to see an orange arrow saying, hey, be careful. But the orange arrow is to the upside. So this is a downtrend. Right, you're on a downtrend 8. So you get this orange arrow, and you can see this on the 1 hour chart by initiating display higher time frame detail count. And that's your yellow warning, but it's red because it's telling you that it's to the downside. Okay. By the way, this particular stock on a daily time frame, which I talked about in my recent video, had a beautiful buying cluster all throughout the last week and a half. And this morning, this thing was up, or Friday morning, this thing was up huge, but then it pulled back throughout the day. Okay, we can stick with the daily chart. Notice how the daily disappears because there's no need for it, because you can see it right here. So this is the 2 on the daily. And now if I go to the 1 hour chart, that's that same 2 right there on the daily. Now, this is new stuff that we're doing. Guys, this is still a beta release. It is possible that there could be a bug here and we found one and we're still not sure what's causing it. We're thinking it's a TradingView issue and not us. Someone is asking why the display trend numbers not default. I wanted to default to the cleanest possible thing. And if you want them, you can turn them on, but you can also create your own defaults. You can set as default. So once you have an idea of what you want to do, you can set that as your default. So it doesn't matter if I had everything as the default or nothing as the default. I wanted to have it clean and useful. And if you need the extra information, you can add it, and then you can set it as your own personal default. Okay, so let's move on. So that's the higher level time frame of current candle. I'm going to turn all of these off now. Let's clean up the chart. This is your original default. Daily chart. Now comes, you know what? I'm going to do that last. The stars will do last. Multi time frames. This is, if I zoom this out, that's this. This is the hourly chart of a stock. This is where it topped on a weekly scale, topped on a daily scale. These are showing up by default. You can turn these off universally by unchecking multi-time frame summary visible, and they will all be gone. You can also choose to turn them off individually. If you don't want to see the yearly and you don't even care about the monthly, and you don't want this chart to not work on BLX index or other indices that only update daily, turn off your hourly, and you can turn them all off, or you can leave some of them on. These are your custom timeframes. For example, right now, let's say I want to set a custom 1, and I want my custom 1 to be, say, 8 days. For some reason, or say 9 days. I want my week to be 9 days. So if you set this to 9 days, that is your custom 1 time frame. And I click OK. If the relationship showed up, well, here's your daily. So 9 days wasn't far away. So maybe 8 days would do it. Let me try that. 8 days. Boom, there it is. That is your custom 1. When you have a 1 here, that's your custom time frame. This seems to be a little too much, but this is hourly. So for 8 days, I'm looking at an hourly chart. And right here, during all of these hours, your custom 8-day time frame was successful. I should have just set it smaller. I should have just set it to, let's do 5 days. Right there. Okay. So there is your 5-day custom time frame. Though I would have assumed it would also show up earlier. This is still a little bit experimental. So now if I go to a 5-day chart, right there. This is a 5-day chart, and you can see how the 5-day chart gives me an MRI bottom this right now, which is perfectly in line. If I go to the 1 hour, it's telling me that as of 7 hours ago, my 5-day chart was on a buy. And if I make this 5 days, you see that right there. I just randomly chose these numbers, guys. Now, what I am finding a little concerning, and we tried testing this as much as we can, but a real testing environment is different, is it doesn't seem to be showing me this one or this one, or maybe it's further back. August 6th was also a custom 1 time frame. So if I go back to the 1 hour chart, maybe there's limits to how far back we can look. But what matters is in real time. It doesn't matter what the history says. Real time is what matters. So I'm not sure why it's not showing up historically. Maybe we couldn't do it. So maybe it'll only show up in real time. But those are your custom timeframes. If I would have set that here, multi-frame custom 2, then it would show up as 2. So you have to know what your custom timeframes are. Okay, so now instead of 1, it's going to be 2. Right there. Okay. I don't really use these, but again, it's for you guys. But remember when I used to say, if you turn on the trend numbers, I used to say you can buy when a 2 starts trading above a 1. There's even t-shirts. 2 needs to trade above a 1, and then it's a buying opportunity. It didn't happen here. It didn't happen there. But the 3, well, at some point it happened. Never happened here, but here the 3 starts trading above a 2. And instead of constantly saying it, I wanted to allow people to do that themselves. And this can get a little complicated. Trend change close condition and trend change extreme condition. Now, when I used to say buy, you have a buying opportunity if there was a green 2 above a 1. This is the aggressive way of trading the trend part of the MRI. If you set this to prior candle, that's exactly what it means. Setting it to prior candle, you see the red star here, green star there. This means that the moment a candle, the first candle in your trend series, starts trading above the previous candle, put in a star. In this case, since I don't have a close condition, this star will appear the moment you start trading above the prior candle's high. So here's your first candle. Here's your second candle. Second candle never traded higher than the first candle, but the third candle started trading higher than the second. And that created the star based on this setting. You can also say first candle. That means instead of trading higher than the prior candle, you start trading higher than the first candle. So if I make this switch, nothing should actually change. But what the first candle means, the first candle always means a candle with a number 1 on it. So you don't have to wait for this candle to trade above the prior one. In this case, it's a more stringent condition. This third candle would have had to trade above the first candle, which happens to be higher than the second. It's really up to you to decide your sensitivity inside these stars. Okay? In this case, the star didn't move, but in other cases, it might. This was my thought process. So always remember, prior candle means candle before. First candle means candle with a number 1 under it. And by the way, do you have something called replay mode? If you click on replay mode and you on this button here, and then you click on, say, this candle here, You delete everything, and now you can see these trend numbers. So right here, this is actually the first candle in the series. It's really up to you. I don't have a recommendation. I can, and I shouldn't even tell you what I am using, because just because I usually use prior candle, it doesn't mean that it's better than using the first candle. This is something that you will need to build into your trading strategy. This is going to be an interesting case. So a couple of things. So right here, let me zoom in on this because this is a great example. This is a great example. This is an MRI bottom, but notice how it never made it to the 9th candle in the series, because the MRI bottom will show up the moment you have any kind of a print lower than 4 candles earlier. So it creates the MRI buy, but it did not close in that relationship. And therefore, first of all, it did not create any extensions. And second, this is also the first candle in the new trend. And look at our set. We're saying that, well, if you trade higher than the first candle, you should get a star, but we didn't get a star. If you chose prior candle, I'm trading higher than the prior candle, and I still didn't get a star. What is going on? The reason you didn't get stars is because I didn't want to clutter too many things with stars. So there's this checkbox here, display reversal star after the MRI top bottom, because this arrow already tells me to consider long trades. I don't really need to see that star because it's cluttering my chart. I know I should be paying attention to a buying opportunity as it is, but if you also need that secondary confirmation, you need to check this box, because you will not get the same color star as the arrow immediately following the arrow. Now, if you had a red star in between them, then you would. But it was very challenging coming up with a readable, human readable option here. So if you want to see a star in the same direction as an MRI arrow, you do need this box to display the stars with the reversal of the MRI. And in this case, the prior candle is the first candle. And therefore, it doesn't matter which one you choose between first or prior. But there's also another condition. There's also the close condition. And I like the close condition. Here's what the close condition adds to this thing is that I usually set the close condition to first candle, not prior candle. So I want my candle to trade higher than the prior candle, but also close higher than the first candle. Now, in this case, the prior candle is the first candle. But if I end this and I go to the current environment, here, what we have is a situation where we traded higher than the prior candle for the first time, but we also closed higher than the first candle in the series. If this candle had traded higher than the second candle, but then pulled all the way back down and closed lower than this high, this green star would have disappeared. Now, this creates a little bit of a problem for a trader because, well, the star showed up, I took the trade, but then by the end of the candle, the star is gone, so should I get out of the trade? And that, again, is up to you. It's up to you as the trader to decide. But I'm giving you the option to customize these stars however you like. And if you don't care about the close condition, you leave it none. But if you have the close condition, and you can set them to be the same candle, you can set, hey, I need to trade higher than the first candle, and I need to close higher than the first candle. So which this candle did. It traded higher than the first candle's high, and it closed higher than the first candle's high. So the green arrow remains. If I set this to prior candle and prior candle, well, this third candle traded higher than the second candle, and it closed higher than the second candle. So the green star remains. Okay. But there will be times where one of the conditions meets and the other one doesn't. And you can play around with these settings until you find your perfect settings, if you even care about these stars. Okay. Now, if I turn this off, you will see this red star disappear. Watch. Gone. Because I don't need a red star telling me that I should be in a short trade because I'm already with the MRI. But some people want that confirmation. Maybe it's not a bad idea. You want that confirmation. This is where I'm trading lower than the prior candle, and I closed lower than the prior candle. Now, we could make this more robust. I could also say close higher than the body, or it could get very complicated. Now, it does get complicated. So these are your basic tools. If you look at this next set, continuation of trend. Also, if you've watched me enough times on the prior indicator, I always said that when it comes to continuation of trend, I have more requirements. What does that mean for continuation of trend? This is a reversal of trend, but this is a continuation of trend. This is a red star following an MRI buy. Replay mode, we're going to go right there. We're going to bring back one candle. Boom, you have an MRI buy. Let's look at my arrow settings. I usually want a close higher than the first candle and a trade higher than the prior candle, though this could also be none. It's really up to you. I'm going to display reversals. So if we start going up, I will get a star for confirmation, like this one here, because if I uncheck, this green star goes away. Boom, gone. Up to you. But this starts to get more complicated. Continuation of trend, change, close condition. If you have these set to none, it will just use these parameters. But if I click this arrow, you have more choices. When you have an MRI buy, right, like this, which wasn't even a true MRI buy because we did not close with the relationship. You already know what the prior candle means. It's literally the candle before. The first candle is the candle with a number 1 under it. It's this candle, this green one, this red one, this green one. The last candle means the MRI buy or sell candle, the MRI top or the MRI bottom candle. So the last candle means the candle with the green arrow. It can have a 1, 2, 3 above, it doesn't matter. But the last candle means this candle or this candle. It's the last candle in the trend, which in this case also happens to be the first candle. They happen to be in line, but in this case, they're not. This is the last candle. That's the first candle. And that's another first candle in a different direction. But this is both last candle and first candle. And we also have biggest. And by biggest, I mean the candle that made the swing low. So the candle that creates, well, this does create, if I get one more candle in there. Well, we'll do one more. There it is. So you can see that star anyway. So it's the candle with the lowest price. Again, all these things are so hard to explain. I know people are probably tired. And here, by biggest, I mean the one that had the lowest price. So if I change this to last candle and I change this to last candle, I think we do have a hard-coded condition that we cannot put a star on a first candle. And then it does make sense. I may keep it this way, so it does make sense. Because I always say, never trade the first candle in the series. Unless it's in this direction, because this is already telling you to potentially go long. So this is the one you could trade, but only up. This I would never trade going down. I would wait for a confirmation candle. But now I have an extra setting that says that because it's a continuation of an MRI, I need to close lower, not lower than the first candle in my down series, but close lower than the last candle in the prior series. That's the big difference. Here, last, and this stays the same, prior. I always want a new lower low. Okay. Let me briefly glance at your questions. I think I already answered some of them. Would you recommend first or prior for people most familiar with the old indicator? People most familiar with the old indicator, it's prior. And the closing didn't really matter. It was just trading higher. Perhaps consider leaving the breakout line and adding a more aggressive, tighter breakout line. I can maybe give you a toggle as to how aggressive or how relaxed you want that breakout line, and there'll be two different rule sets. I see a couple of questions, and I do want to answer these questions. I'm going to go ahead and read those out real quick, and they're almost the same question. So I had no problem understanding the trend change condition options. But what exactly is the continuation of trend change option refers to? And an almost identical question says the continuation of trend change close and the continuation of trend change extreme is the only setting I do not completely understand. I will try to explain this one more time because there is some confusion, and hopefully this will clear it up. I changed the underlying asset. I'm going to cut the camera feed. Not necessary. Okay. And here we are looking at that CBOE that had 5 consecutive MRI tops. And before we had our 5 consecutive MRI tops, there was also 2 MRI tops that never made it to the MRI top because they topped on 1 candle earlier. That's the orange arrow. So here, I'm going to pull up the MRI settings and try to just summarize it one more time. Now, the trend change close condition and the trend change extreme condition. Extreme refers to the highs and lows of prices, and close refers to the closing price versus another relative close. So the first candle always means candle with a 1 under it, and prior candle means the candle right before. So you can set the closing condition to non-existent. And now the only thing you care about is the extreme condition, which is trading either above candle with a 1 on it or trading above the prior candle. The check mark for display reversal star after an MRI top, if you, let's just say you're not going to have it here, or actually you will have it here. So right here, you have an MRI top. And notice there is no red star here. So I think this is pretty clear. So to turn this on, oh, there wouldn't have been a star anyway. Sorry. Because the conditions were never met. Oh, these conditions also have to occur within the first 4 candles. And then you don't get a star on candle number 5 or anything like that. It's only early on in the count. So I can back up a little bit more then. So, but I think you guys understand the reason for that check mark. It basically means that this is normal. This is, you have no MRI tops anywhere, and because of that, you get green stars, red stars, back and forth. The reason for the check, I'm not even answering the question. The question is about the continuation stuff. But the check mark would allow for a reversal star. So if this big white candle following the 1 was to be in reverse, you would not get a red star unless this thing is checked. What does continuation mean? Continuation means continuation of trend. And if you don't have them, it does not, it means that you're still getting this green star. This green star uses the parameters of these things. I'm trying to find the best way to explain it. I'm going to go into replay mode. Put it right there. And now I'm going to go to full screen. So there's your warning. There's your MRI top. Oh, it's weekly candles. There's your MRI top. There's the first candle. And there is the second candle. And you get a star. And if we look at this, okay, if we look at this, it follows these conditions. You are trading above the prior candle's high, and you got a star. So this here, these conditions apply that this candle just needs to trade above the prior candle's high, or the first candle's high, which in this case is the same thing. The continuation condition gives you additional options that rely on the candle with the arrow. So these are, because for me personally, I do not like to buy a green 2 above a green 1 if it is also not higher or than the close of the MRI top. So I need an additional condition. And this only applies to this situation where, and I'm going to stop replay mode. The continuation condition is only for stars that follow MRI alerts in the same direction. So it's the continuation of trend following an MRI top or bottom. So they are additional criteria that you can select that would add dependency for this star showing up that takes this MRI top into account. This red and this green, there is no MRI top to consider in your mathematical equation. But here you have an MRI top. So I'm giving the user additional options like the last candle of the prior trend being, and that literally refers to this candle. It's the last candle in the MRI trend, or the biggest candle, meaning the candle that reached the highest price, whether it's the highest closing price or the highest extreme price. So I'm giving you 2 additional options to base your star off of that relate to the highest close in this trend, the highest swing high in this trend, and the last candle of this trend. So it's just additional conditions for you to add to why the star is showing up. Because in my eyes, I don't only need this candle to trade above the first candle. I also needed to trade above the body of this candle. Now, the body part is not actually in here, unfortunately. Only the close is. But the close is usually in the proper direction. So I'm trying to find an example where, and in this case, they're all rallying really, really strong. But so I don't have a good test case in this particular asset. So right here, for example, do you see this red star? And I don't like this red star because while this red star is trading, let me do replay mode again. And this is where there could be bugs in those stars. It's still a work in progress. So right here, we have the MRI bottom. And look where the low is. Now, I'm going to turn on the stars the way I want them to work. So right here, I want the continuation of trend change close condition to be lower than the last candle. And the continuation of trend change extreme condition, I will still leave prior candle. Though I'll show you another example of that. Okay, so what is now happening, or actually, let me remove these for now. I'm trying to explain it in the best way I can to run replay mode. And I'm going to take this line and I'm going to just notify you this is where my last candle of this trend finished. Now let's see next candle. Next candle is an up candle, but it's still a red one. So what do my conditions currently say? I would get, if I have a red 2 below a red 1, if the next candle starts trading lower than current candle, I get a red star. Let's see what happens next candle. It did not, so there was no red star. But now, if the next candle trades below this previous candle, I should get a red star. And there it is. This candle started trading below this red candle. Now, if I add another condition to this, which says I also want to close lower than the prior candle, nothing changes. We did close lower than a prior candle. What this means is I am adding an additional condition that adds dependency of this red star to this MRI trend. So if I say I also, like, honestly, this red star should be there right now because we are closing lower than the first candle. But if I set this to be the last candle, I now need the close to be lower than the close of this last candle in this series. You don't have a last option because here there is no last. This is specific to more downside following an MRI buy that allows you to add dependencies not only to things that happen in this last candle, but also the candle that made the lowest close and the lowest low of the entire series, which also happens to be the last candle. So in this case, last and biggest is identical. And these are the best names I can come up with because biggest refers to this lowest possible low and perhaps this lowest possible close, because I didn't want to add 100 options. Maybe we should just remove these. But I wanted additional dependency on this candle here. And there won't always be a last. The last literally refers to the MRI candle, the MRI top or bottom candle. And like here is the extreme. So if I set this to none and the star is there, well, this is the case where the star should not be there because I have a dependency on closing lower than the last candle, meaning this one. Or I can set it here. I need to trade lower than the last candle. And now I need to trade lower than this, which actually happened. Right there. So I'm not sure, but the next candle should bring it in. See, still no red star. So this is what I would get if I set the condition to close lower than the last candle, this one. So I hope that kind of clears it up. But now that we had a green one, that no longer applies. Once there is a green one, then the extension trend no longer matters. This part, these continuations only matter if the counts keep going into a second consecutive MRI buy, MRI bottom. If you get a flipping of the color, then these no longer apply and it only goes to the regular ones. I hope that finally clears it up. And there's your green star, because the continuation of trend no longer applies and the reversal of trend. So this here also no longer applies. These three things, this check mark and these continuations, they only matter when you get the same color continuing. So this is only for consecutive MRI tops and bottoms. All right. We are done with explaining everything in the settings and the MRI, and now it's time to talk strategy. Oh boy. Okay. Let's talk strategy. I'm going to start with an example that I am somewhat familiar with, and because I've taught it before. We're going to go to the daily chart of Bitcoin. I'm going to undo replay mode. We're going to take this back to 2017. March of 2017. We're going to do this. We're going to expand that. Oh boy, wait, went too far. Oh, that was a crazy day. That was a crazy day. I think this was the creation of the Darth Maul candle, or at least that's where the name Darth Maul became popular. This is the Darth Maul candle. What happened on this day? Wow, did I actually guess that? Did I actually put this day in here? Wow. Bonus points. Who can raise their hand and without Googling and say what happened on March 10th, 2017, because I remember. Any hands? That was the day the SEC made its first announcement whether there will or won't be a Bitcoin ETF. And everyone thought the SEC was going to approve, and then people thought that they weren't. And then that morning, for some reason, everyone thought that they were going to approve it, and then they didn't approve it, and then it didn't change the price all that much. And everyone got crushed. Everyone. I told everyone to get the hell out of the market. I actually was not looking at the MRI or its predecessor at the time. I would have absolutely got out right here with the MRI. But at the time, I wasn't looking at this indicator at all. It was before I ever mentioned it and before I was even looking at it on a Bitcoin chart. But certainly came in useful in hindsight. So we're going to start this the day after. Right there. We're going to make this a bigger chart. We're going to immediately look at this chart and be very aware. Oh, and we're looking, yeah, you know what? I will leave details. We don't really need the details, but I can leave them. I can leave all the details. If you like all the details, higher level time frames is very important now for this example. And we're going to put all the details in. These are all the details for educational purposes. So that's an MRI top. Clearly warned you. This is also an MRI top. Classic 1 to 4 candle correction, which is one of the things I teach, is very often these MRI tops lead to a 1 to 4 candle correction, and then you enter the extension phase. This was the extension phase A, B, and C ending from this MRI top. Oh, I'm sorry. I need these things. Much better. I need these. And here's another C. So the second C is coming from here. And the second A is coming from here. And this B is also coming from here. But this starts a whole new set of extensions. And you can see A2, because this was A1 and B12. And there is also another B in the background, which is that one that completes. So right here, this candle has A4, B4, and C9. Anyway, we hit our MRI top. I always assume a potential for a 1 to 4 candle correction, and then you reevaluate. If we continue falling beyond the 4 candles, there's a high probability we will keep falling. So right here, we corrected for a couple of candles and started going higher. And your breakout line is unreasonably high, which is what I want to adjust. So that didn't help. If I turn the stars on, which are completely off, and I like my defaults, first candle, that's candle number 1, prior candle. So here is a candle. Now this is a continuation of trend situation. So I can add the continuation of trend parameters of also being above at least the close of the last candle. Assuming this is working correctly, I want to close above the last candle. That's an additional requirement to the others. I should talk to my developer. We'll clean it up. There will be another release. Maybe I should do a video or a workshop only on the stars in the future. So this star helps me, and this is why it's called continuation of trend. This star, along with this breakout line, help me get back in the trade for a continuation of an MRI top. That's why it's called continuation. And the reason why there's no red star here is because I do not have display reversal star checked. And there it is. Okay? Because I didn't need it. You could have it. And we can also potentially add dependencies on this last candle, but now it gets really, the amount of permutation starts to get out of control. It's up to you. Do you want it? Do you not want it? Anyway, let's move on. I actually want to talk about April. I don't even want to talk about March. So we're here in a 1 to 4 candle correction, starting potentially with this candle because it's technically lower than prior candle. But around here, you start to get an idea that this is more likely to keep going down. And then this candle shows up and it closes and breaks the support line. So you're in full bearish mode. Let's see what happens next. You're either in a bearish trade or in a no trade. But look at your higher level time frames. Your monthly is just beginning. It's on a 1. You did have a monthly high. The month of February was a monthly top. Keep that in mind. But now we're in March. So it is a continuation. So we're on a monthly green 1, which makes sense because we topped the prior month. And now we're still trending higher. This probably takes me out of any short trades. It's what stop losses are for. There's my green star. That is the green 2 above a green 1. I'm trading higher than the prior candle's high, and I'm closing higher than the first candle's close. Both conditions are met right here. The continuation doesn't apply anymore because the MRI top is long behind us. And you know me, I love buying the break of a consolidated high. But this already puts me in a bullish trade. Right there. Puts me in a bullish trade. I should have it set as green. Where's my stop loss? This one is hard. Stop loss all the way below this swing low is unreasonable. Below this swing low is also somewhat unreasonable. My most reasonable stop loss, and we do have a video for entries, exits, and stop losses, is probably this swing low. That is probably my most relaxed, reasonable stop loss, and stop losses on my charts are in blue. We are on a 3 towards an MRI top, but look, we're on a weekly 7. We have the room on a weekly time scale to go higher. So let's go. Good. Am I raising the stop loss? Maybe. I'll raise it. I don't want to risk too much. I'll raise the stop loss. And I'm stopped out. I would have been stopped out either way. But hey, look how much money I saved. I saved more than 50% of my position. Let's see next candle. Whoa. So the red star would have shown up the moment we started trading below the prior swing low. Now we're still bullish on a weekly scale. So nothing to panic there. But am I in a short trade? I don't know, maybe. I probably wouldn't be. Look, weekly just flipped to be bearish. We did have this red 2 go below red 1. That's what the star does. And if you took the short trade there, which I usually indicate with a red line, and the star, that's what the star represents, the potential short trade, you did well. You crushed your losses. You made up for that and then some. I didn't say it, so I'm not in a short trade. Obviously, I would be tightening up that stop loss, probably at that candle's high. The break of that still makes up for that other loss. There it is. Let's see. I'll wait for the green star. I'm not going to act until I see another green or red star. So this is an unfortunate situation because if the red star comes next candle, which it might, I feel like I've already missed the move. Feels like the move was back here. I want to delete these Fibonacci lines. They're just annoying to me now. I don't even know what they were, but I hope I didn't need them for my normal charts. I'm going to no trade. I'll wait. I'll wait. Boom, green star. I actually don't remember what's going to be happening right now. I really, my memory is not that great. It's okay. It's not great. And I hope it was back here in April. But this again gives me a bullish trade. And the stop loss is once again very, very far away. And I'm concerned. It's a very wide stop loss. I don't want to go all the way here. That's too much. Normally, that's what I should do, but it's too much. I'm going to tighten it up. I'd rather lose a little bit of money than screw up. Nothing. Nothing. Okay, I'm making money. And we're on a 5. We're getting, I don't need to see these numbers, by the way. I know we're bullish. I had the green star. I never had the red star. We're good. We're good. Boom, orange arrow. I am now being informed that, hey, next candle could be at top. You may want to take some profit. And my profit is usually the purple line. There's my purple line. All the extensions were canceled. So did I exit the trade yet? The answer is no. And Bitcoin's 24 hours. If this was a Friday on Apple stock, I probably would have taken my profit, or at least some of my profit. I will, if we go up to somewhere like $1,170, I will take a part of my profit. And if this candle is a shitty reversal candle, I will take all my profit. Let's see what happens next. I have no idea, to be honest. Shitty reversal candle. So guess what happens? I am taking all my profit off the table. I will take all that profit at some point during the day where, since we don't know what happened, I'm taking all my profit at the end of the day, right there. So this was a profitable trade, and it made 10%, 9.5%. Very good. I'll leave that there for future use. Now, what happens on this candle? We had also extension A, candle 1, and extension B, candle 1. We're also on a weekly bearish 4. So we're in a bearish trend. We're in a monthly bullish 2. So we're starting a monthly bullish, but we're still in a weekly bearish. Now, what am I expecting? I'm expecting a 1 to 4 candle. Oh, by the way, I'm also moving up my stop loss. That's insane. When this big green candle happened, I'm at the least raised it to the bottom of that candle. And when this giant candle happened, my stop loss is probably somewhere in the middle of this candle. There's no way my stop loss is all the way back there. This is the stop losses workshop, guys. I've done that one before. So, but I'm out. I'm out of this position completely because I'm scared of the reversal candle. And I'm in a bearish trend weekly. I already went against the higher level trend to take the damn bullish trade. I'm out. I'm in cash. Let's see next candle. I am still in cash. But if the next candle, and this is where the continuation of trend comes in. Continuation of trend change extreme condition. I mean, this shouldn't matter, but prior candle. If I start trading, if the 2 starts trading above the 1 and above the last candle, which it will because they're the same, then I'm bullish again because my breakout line is too far away. I'm willing to be bullish somewhere around $1,155, but I'm going to wait next candle. If next candle goes above this line, I would consider buying in with a smaller position. I'm also looking for a 1 to 4 candle correction. But if I see strength, I'm in this trade for the extensions because the extensions are useful as well. And my new friend and former unknown mentor, Kevin O'Dowd, he loves trading the extensions or the Tom DeMark versions of extensions because they're different. He's the extension guy. He doesn't trade this. He would never, I mean, he might, but he loves to see this to trade the extensions. I like the extensions, but I also like trading the trend. Anyway, let's see next candle. Beautiful. Look at that. We break this green line. I really didn't know that was going to happen. I really did not. I have some vague memory of what's supposed to happen in like April, May, and going into June, but not the exact day today. I have no idea what's going to happen day to day. So I can get stopped out, and I'm following my own rules. We have all 3 extensions here. A is on a 2, B is on a 2, C is already on a 6 because C started earlier. Green star showed up probably very early in this candle. The moment we were breaking above the close here, that's the extreme close condition. And the regular prior candle was here. I am in this bullish trade. My stop loss below the swing low. But if we trade higher, that stop loss goes to break even immediately. I have no profit taken. My profit taken is Lambo. This thing is just getting started. I know I'm still bearish weekly. I'm waiting for this to go green. Reversal candle, doesn't matter. Extensions are going higher. No reason to raise my stop loss. Nothing has changed. Let's see next candle. Still no reason to raise the stop loss, but it's, getting a little discouraged here. I'll wait one more candle. Beautiful. It is time to raise that stop loss. We just made a new closing high. We just made a new swing close. We are further along. We're halfway to the next MRI top, which would be a double top. Remember, double tops do not create new extensions. I will raise the stop loss. I don't know if I'm ready to raise it to break even, but I will certainly raise it to at least the bottom of that big breakout candle. But now I'm ready to break even. I don't want to lose money on this trade. I just spent 1, 2, 3, 4. I've been in this trade for 5 days. I can't lose money on this. Okay, that's number 7. Orange arrow. I got my warning, but look what else I got. I got, finally, the weekly is turning bullish, but it's still the first candle of that week. The weekly would also get that star if it meets the star conditions, but you'll have to flip to the weekly candle, which I don't want to do because I'll lose my replay mode. But now, where's my purple line? My purple line is my profit take. I will start to take profit. If we see, I already see weakness. If we start trading below that candle tomorrow, I am taking profit. And if we start trading up here tomorrow, so if we start trading below that candle, I am taking all my profit off the table, all of it, just like I did back here. But if we start trading above that candle, I'm only taking a part of that profit off the table. Maybe half, maybe a third, maybe 2/3. Who knows? Your call. My stop loss. Actually, I'm going to put my stop loss right there. That's my stop loss now. Very tight. Now, there are extensions happening. This thing can easily keep going with extensions. But I am concerned for the double MRI top. So either way, I'm taking half profit there, all profit there. Let's see what happens next. Wasn't that a great call? I didn't know this was going to happen. I honestly did not. And this is why you have to raise that stop loss, because if it was still here and then you get stopped out, look how many days you spend in this trade. You were making so much money. Well, actually, you weren't making that much money. You were making 6%, which I know feels like nothing, but with proper leverage, it could be a decent trade. And this is not an educational workshop on leverage. Anyway, another profitable trade. Did I short off of this? I don't know. I didn't say it, so I'm going to say no. I'm not supposed to short Bitcoin anyway. 1 to 4 candle correction. This is a monster correction on first candle. Let's see next candle. Okay, still in correcting mode. Maybe the correction is stopping. Oh, there goes my red star. So this red star showed up because I have display reversal star checked. If I did not have reversal star checked, it goes away, because this is what allows you to get stars in the opposite direction of an MRI top. This is conditions for continuous directions of an MRI top. So like I said, these 3 things rely on an MRI top, and these 2 do not. Am I taking the short trade? I don't know. I'm not comfortable yet. It is the 4th candle, or maybe the third candle, this, to me, this counts as a correcting candle, but 1 to 4 candle is very, there's no clean definition there. I'm not in the market. I'm not in the trade. I'll wait for a green star. And there it is. Now, when would this green star show up? Well, I know when it would show up. It would have shown up right there. Am I taking the bullish trade up there? Maybe, maybe not. It feels like you've missed a move. The stop loss is simple. It's back here. I'm going to take the long trade, but it would be very, very, it would be a little smaller than usual. We're bullish weekly. We're bullish monthly. We just became bullish daily. I would rather take a small position and add to that position if we trade higher than current candle, because then we're breaking the prior swing high. And I love buying on a break of a prior swing high. So I'm in for half, and I'll go in fully if we trade above that green line. I don't think we traded above that green line. Maybe, maybe not. I'm just going to say I did not get in, and I will get in next candle if we trade above this green line. Okay, I'm in. I'm in. Beautiful. We're only on a 4. Plenty of room. The green star got us in nicely. My average entry is somewhere back here. My stop loss is back here. Huge bullish trade. Am I ready to set a break-even stop loss? Maybe, maybe not, but I'm certainly not going to have it lower than that. And now there's no way in hell I will allow this trade to lose me money. Now, we're still working on our extensions. We have extension A is almost complete. It's on a 12. Extension B is on a 10. Extension C is on an 11. So they're about to start completing. But am I ready to take my profit? I am not. And they're all going to cluster. So I'm going to just tighten up that stop loss. Let's see next candle. Oh, that hurts. Oh, so we got the A13 candle, and look at that wick. Ah, that hurts. And I made money on this trade, but it hurts. The day opens, it crashes. You get out of that trade with a cup of coffee in profit, and then you watch it go all the way up, and you are not in the trade. And, shit happens. If you set a higher stop loss, you got out so much better, and then you can consider getting back in as it comes back to where you got out. But if it stops you out back here like it did to me, buying it on the way back up at the same price, I would not have done that. So I am almost screwed, unfortunately. But you don't have to trade like me, and that's the point. The point is you need to design your own strategy based on how this indicator helps you, or you may not even use it if you don't find it very helpful. But extension A is done. I'm not gonna buy in. I'm just gonna be pissed looking at what happens next. We're already close to an MRI top. We're close to completing extensions B and C. Maybe if I was more interested in tightening my stop loss because I knew an extension A was gonna happen, could have gotten out way earlier, and I could have had way more options right now. But we're not in this trade. And now there's an MRI warning, and this should be an MRI top, and it is. And not only is it an MRI top, it is also an MRI top with an extension C top. And the extension B top is coming tomorrow, no matter what, because the open is a proxy for the close. So, and it's a 24-hour market. So I'm 100% sure that the MRI, that the extension B is stopping tomorrow. That's a big cluster. Am I ready to short? I don't see any weakness, but where's my red line? If there is weakness tomorrow, if tomorrow starts trading below this red line, I will take a very small short trade, because now I'm going against the weekly trend. Look at the weekly. The weekly is now on a 3. There was a green star on a weekly somewhere in this vicinity. So if I had the weekly chart up next to me, or I flip this to a weekly chart, you have reasons to never exit the daily trade. The weekly is keeping you in the game, and the monthly as well. The monthly green star probably showed up too. And taking the short trade, the only reason to do it is because of this triple cluster of an MRI top, C top, and B top. And it would only be for a 1 to 4 candle correction. If we even cross this red line, let's see what happens. We did not cross this red line, but we made this massive reversal candle. And I am just going to move the red line up. I would love to get into a bullish trade, but I can't. I feel like it's running away from me, but I'm not going to FOMO buy. I will take the short trade off of this reversal candle. If tomorrow I'm not even going to wait till breaking the low. I'm still buying off of this arrow. I never trade the first candle. And I'm going to, if we cross below this red line, I'm taking that short trade. But it's going to be a very tight trade. Maybe even a scalp. Maybe even a 1 or a 2 day trade. It's very risky. And clearly I did not take the short trade. But now we're going higher. And this is where I'm probably FOMO buying. I didn't mention it earlier, but I am going to FOMO buy this. Now I have another green star. We broke the breakout line. Now, in this case, the breakout line was lower than where the star came. So I am trading way above the prior MRI top. I have another set of extensions. I am probably buying somewhere in the vicinity of this breakout line. That's why it's there. That's its whole purpose. Unfortunately, I may be cheating a little bit. If I wasn't cheating, I would say I bought right at the end of the candle. But guys, I would be this is my FOMO buy. And we're at a new all-time high. Not on the swing, but certainly on the close. So I am in as of the green line. Stop loss. Where's my blue line? Where's my stop loss? I honestly don't know. Maybe somewhere down there. But I'm dying to raise it to break even. Okay, nothing changed. Nothing changed. New swing high, new close. I don't know if I'm ready for a break-even stop loss, but I'm certainly going to raise it. Look, weekly 3, monthly 2, extensions going right into a double top. I'm happy with this long trade. And now I am absolutely raising that stop loss. I keep getting stopped out early, but you know, maybe I'll just split hairs and put it there. Beautiful. Look at that. We're rising. Look at my weekly. Weeklies started at 4. Great. Dailies on a 7. Extensions still have room. Everything looks great. Maybe I'll even raise that. I don't want to get stopped out too early here. I'm very bullish. Everything is bullish. New all-time high. Bullish as hell. Warning. Does that look like weakness to you? No. Just raise that stop loss. Maybe even to, I'll probably raise it. I'll be conservative. I'll raise it to the bottom of that candle. Huge profit now. Wow, look at that. I just avoided getting stopped out. Gorgeous candle. Second consecutive MRI top. Crushed the prior all-time high. And this was a stupid news event. So that's the technical, that's the real prior all-time high. But, you know, my memory, I don't even need my memory. The last time we had a double MRI top, look what happened. The prior time we had a double MRI top, look what happened. I'm concerned. Look at that big pullback at the end of the day. I don't want to mess with this. I'm taking some profit here. I'm out half my trade. I can always get back in. And if we start trading lower than probably the bottom of that candle tomorrow, I am out. But we're bullish weekly. We're bullish monthly. No concerns. Still have room on my extensions. I am out. The extension C has ended, and I am out fully with this trade. 1 to 4 candle correction, And then I would love to potentially get back in. Ooh. Now, not yet. I don't see a green star there. But if the next candle starts trending higher than this candle, I have to get back in. Look at my weekly. Plenty of room. Monthly. Plenty of room. No concerns. Maybe we'll get a third consecutive MRI top. Nothing changes, but I'm going to lower it. No, my green star is about to show up here. Though, right, because I'm not dependent on this swing high. My parameters for the MRI, assuming they're working correctly in the future, depend on the last candle close. And condition for extreme is the prior candle. So I need to trade above this candle. I need to close above the first candle, which is this one. That's not hard. But I also need to close above that candle. So now there's three conditions. Close above the first with number one, close above the last, which is this MRI 2, and trade above the prior. So going above this green line should create a green star and put me back into the bullish trade. Beautiful. Look at that. I didn't know that was coming. I won't be able to get away with this statement next time I teach this workshop if I use the same example. I just know what happens later when these MRI tops come. But look, we're weekly 5 now. Time is flying. We're on a 5 weekly. Still plenty of room though. I'm bullish of this green line. My stop loss, I'll leave it where it's at. Profit take, Lambo. I'm not shorting anytime soon. So let's see what happens next. A has ended, but we still have B is only on the 11, and there is no C anymore. C has ended. Remember, the second consecutive MRI top does not create new extensions. So we're ending extensions from this MRI top. C ended first, A ended second, and B is going to end in a couple of candles. So I'll just stick with the bullish trade. I'm not going to raise my stop loss yet. The moment we trade higher, I will. I'm raising that stop loss. I am not going to lose money on this trade. You can either go right above the entry or right there. I'm going to be conservative. I'm going to go there. I know the next candle is the top in the extension B. Maybe I should take a little bit of profit. We will see what the candle looks like. The candle is very bullish. Not very bullish, but it's bullish. We still have a couple of days to go before an MRI top. I will just raise my stop loss to the prior candle's low. And that got me out of the trade. Now remember, you didn't have to wait. Once this candle started to crash, you could have simply exited up there. Maybe I should have been more conservative and raised it to that candle's low. But you could have also done it during the trading day. Either way, another profitable trade. Makes like 4 in a row now. Rules have not changed. MRI warning, could have gotten out earlier. I didn't know what the candle was going to look like. Weekly still bullish, only on a 5. Monthly is only on a 3. Still got room. And there it is. There's your third consecutive MRI top. It is a bullish candle, but I am out of this trade. I am not interested in this until we are actually above this area, or at least above this area. Either way, the next candle is going to be a 1, and I never trade the 1s. So next candle, no matter what it is, I'm not trading it. Now it gets interesting. We're now at the third consecutive top based on MRI. I would go bullish above that candle's high because look, the weekly is in my favor. The monthly is in my favor. We're just rallying. If we break this, I'm back in the bullish trade and I'm probably going to get my green star. Oh, we didn't do it. I'm staying out of the market. Am I shorting the market? Maybe. Weekly. Wow, weeks are flying. think they're flying a little fast, don't you think? I hope there is a weekly. I hope this is accurate. It feels like the weeks are flying really fast. Anyway, we're on a weekly 6. Where's my red line? What I consider a short, because a red star is going to show up if we start trading below this red line, because I know the rules of the stars. I'll consider it. I'm going against trend. I would have an immediate tight stop like that. I'll go short, but my stop loss when the candle ends is going to be very tight. Right. And now my stop loss is going to be right above that candle. We better fall and fall quickly, because if I go back above that candle, I could get another green star. Now the red star probably showed up and disappeared because we didn't meet the conditions at the close. Yep, and there's the green star, and I probably should have said I'm flipping this to a bullish trade. The green star tells me to do that. So the short trade was dumb. I'm back in a bullish trade. Everything is bullish above that candle. That's where my stop loss was. That stop loss makes me bullish. Green star shows up, closed above the close of the prior candle, traded above the high of the prior candle. Because of the color change, this is no longer relevant to the stars. We're bullish. Stop loss, I don't want to get stopped out again. It's going to be here because look at my weekly. I'm very bullish weekly. Beautiful. One more up day and I'm raising that stop. Excellent. Now I'm going to go break even. And now I realize how dumb that short trade was. There's no reason for me to do it. Weekly is still only on a 6. Plenty of room. New trend, new all-time high. We're bullish. Let's go. Boom. Boom. Beautiful. Raising that stop loss. Let's raise it up. Look, weekly 7 now. I think we just started the 7 on a weekly. Warning. Warning, but look at the candle. It's bullish. There's no profit take here yet. Next candle is profit take. I am going to raise my stop loss. I don't want to risk it. I'm in the middle of this candle. Weakness, I'm out. Strength, I'm out half. Weakness, I'm out full. Let's see what happens. Strength. Wow, look at that. Where did I get out on this candle? Well, if I'm lucky, I got out at the top, but in reality, I got out at the end. Reality of the situation. Extensions. Well, new extensions have started. 1, 1, 7. 7 is coming because all of this uptrend. With brand new extensions. I am out half with my profit. I'll take the other half if there is weakness. If we start trading below this candle or in the middle of this candle, I am out. If we trade higher, I'm going to stay and just going to tighten up that stop loss. Well, where did I get out? I could have got out up there. Could have got out down there. I have no idea, but all I know is that I am out. I am out of this trade. It was a beautiful trade. Look how much it made. Gorgeous trade. I think I had that thing here somewhere, no? That was a very good trade, huh? Look at that. 40%. 40%. After this example, we'll take a break and then we'll come back. We still have an hour and a half to 2 hours. I'm concerned. 1 to 4 candle correction, but I have room on a weekly scale and the monthly scale. They're still bullish. So the monthly is not as important to me. It's the weekly that I really care about. No weekly top yet. And am I shorting this? Probably not. I already got hurt doing a short. Bitcoin is bullish. Let's just wait and see what happens with the 1 to 4 candle correction. Well, keep going. Well, that's candle number 3 of the correction. And that's a nice move off the bottom here, but I need more. I need more. If the next candle is bullish, I'm going to consider going long. Perfect. Now, I still have red counts. Weekly still has some room. Still have a couple of weeks to go. I'm not gonna get a green star next candle. So going long is probably premature. But I can nibble on it. I can go like maybe a quarter of my actual position or a third. Something very small, because now I'm playing the end of a 1 to 4 candle correction. And I might be in for the very tiny bit. Now, that is still a red count. So I'm not going to get a green star next candle anyway. But if we go higher, I'm going to increase that quarter of my position to a half a position. Okay, nothing changes. My stop loss is probably below this area. Not below the swing low, too risky. Just up there. Nothing changes. But now I will get a green star the moment I start trading above that candle. And this is where I will increase my position from half a position to full position. And there it is. Star, I'm in full position. My stop loss, I can leave it or I can slightly raise it. I'm going to slightly raise it. I have extensions in my favor as well, but the weekly is already at an 8. Another week has gone by. We're getting close. So I'm starting to get that orange arrow warning on a weekly scale. Good. Good. Let's raise that stop loss. Don't want to lose money on this trade. Weekly is still on an 8. Let's go a few more days. Okay, nothing changes. Oh, gorgeous. Oh, look at this. Weekly 9. That is a concern. That is certainly a concern. We are now on a weekly 9. We're on a weekly MRI top. That is the 9th candle of the trend. MRI top on a weekly scale. See that W showed up right there? This is how useful these higher time frames are. W shows up right there. But it's a beautiful daily candle. Why am I going to leave? It's only on a 6. I have room. I have room. I'm just going to tighten up that stop loss. Maybe I'll put it down to this red candle. Okay. I'll raise my stop loss either to the middle of this candle or the bottom of that candle, but I'm not ready to move it all the way to the middle of that candle. If this was candle number 8 with an orange arrow, I would. But I'm going to let FOMO be FOMO. And I'm going to leave it in the middle of that candle. Don't stop me out. Oh, God. Oh, look at that. Oh, that was not on purpose. I just missed my, I just survived. I just survived. But look, in reality, the reality of the situation, I might have seen the price crash and I might have just gotten out in the middle. Or I might have just said, I'm going to let my stop loss do the work. Either way, you may or may not be out this candle. But I tell you this, if next candle starts trading with any weakness, I sure as hell getting out. Because remember, this is not just a daily MRI top coming next candle. We're in a weekly MRI top right now. 3rd day of our weekly MRI top. So I need to be taking my profit. I'm out half. Where's my purple? I'm out at least half. And to be honest, I'm out all. I'm done. Like, as this thing is crashing, I'm not going to risk it. One more shot at the top, I'm out. Somewhere in the middle of that candle. What's the gain on this? Is it 20%? It's pretty good. 20% swing. Oh, I didn't need to delete that. That's okay. I'm out. I'm out and I'm going to wait. But now it becomes more interesting because now I'm waiting for a 1 to 4 day correction, but also a 1 to 4 weekly correction. This could be massive. So let's see what happens next. There's my MRI top. You see the orange arrow disappear. Bullish candle, but we still dealing with a weekly top. If anything, I want to short, but I'm not ready to short. I don't have enough weakness yet to short. If we start trading below this area, if I get that red star, I will probably take the short trade. That didn't happen. I got a green star, but I'm very hesitant. Why am I hesitant? Because the weekly is on an MRI top. I'm not going to go, if I'm going long, I'm going along a quarter of my normal position with a very tight stop loss. But I may wait one more day. It doesn't matter if I would have gone long here or up there. If we cross above this, I will consider going long and have a very tight stop loss. Let's see what happens. Now, look, I also have an extension C telling me to get out. I have a MRI top telling me to get out. Extension A telling me to get out. C, the weekly is on an MRI top. The only thing that's telling me to go in is a new all-time high and this green star. I almost have more things to be short than long, but I did enter the long trade. I'm going to be stubborn. I'm going to think Bitcoin is going to the moon, and I'm going to leave my stop loss right above this candle's low. Let's see what happens next. And thank God I did, and I am probably now entering that short trade. That is a disaster. I'm in a weekly MRI top. I'm now angry that I didn't listen to the main parts of the MRI. Remember, the green stars are secondary. The MRI tops are primary. To me, the primary is the MRI tops. To others, the extension tops are more primary. To me, it's the MRI tops, then it's the extensions, B and C, followed by A. Then it's the stars. Then it's the trend, new trends. That's not as important as the rest. And the weekly being on a weekly MRI top should have sealed the deal. So the long trade was stupid, but you can be in a short trade now off of the same place where you had your stop loss. Or if you saw panic early in the day, you could have entered it way earlier. Let's say we entered at our short trade at our stop loss. Our new stop loss is, of course, the new swing high. That is very clear. Let's see what happens next. All right, starting to go down, looking for a one. Whoa, look at that big candle. Got you the red star. You can even add to your short trade right there when the star shows up. Because I entered the short trade based on this mess, and now I'm being confirmed that we're probably going to go lower. I am now looking for a 1 to 4 week correction, and my daily, if I'm lucky, will get me an MRI bottom. So let's see where this goes. That's a huge rebound. Probably concerned. I'm going to set a break-even stop loss and see what happens. Okay, nothing changes. I am stopped out, unfortunately, for no gain. I'm still looking at a weekly 1 to 4 candle correction. We're still only on a 6 daily, but I got scared, and that was a big move, and I'm going to just wait. And now we're bullish. Am I going to go long off of that green star? Well, maybe. I'm now weekly. But remember, the weekly can switch. The weekly was red back here. And right now, it's green, but it could switch. Say you trusted the star. You figured, hey, the correction was only 1 week long. The bullish case is strong. You still have extensions. We go long off of this. I'm going to keep my stop loss tight. That weekly MRI top still bothers me. Let's see what happens. I'm going to tighten up that stop loss. I'm not that comfortable with the bullish trade right now. Still dealing with a weekly top that I want to take seriously. And if I get a red star, I'm ready to go short again. Nothing changes. Nothing changes. And there it is. And the next candle puts me in a red star. I didn't lose much money. Very little. But I am ready to go short again because we're still dealing with a 1 to 4 week correction. And let's see what happens. The red star will show up once we start trading lower. And there it is. I'm going to short trade. Tight stop loss. I'm just not comfortable with this consolidation, but I want to be trading. So far, so good. Weekly flips to the bearish side. Okay, stop loss, still good. Get rid of this green line. My trade is now losing money. I am getting a little concerned. Maybe I'll lower it a little bit. Nothing changes. Nothing changes. Position is profitable. Again, the moment I break these lows, I'm probably going to set that stop loss to here and pray I don't get stopped out. Not yet. Not yet. I'm just frustrated, but I'm staying with my trade. No reason to panic one way or another. Probably lowered that stop loss to those highs. Green star. That makes me reconsider my short position. I can consider a long trade. I could just let my stop loss do the work, or I can lower that stop loss. If we go above current candle, I can't maintain that short trade anymore. And we didn't yet. Still not yet. Okay. But I will not set a break-even stop loss until we break these lows if we keep going lower. I'm still trusting my weekly MRI top. That could take me all the way down to a weekly MRI bottom. Not to mention, that was a big run-up. You know, some pullback is needed. Things don't go up forever. Oh, bam. There it is. Am I adding more to the short trade? No, I'm too scared. But I am going to lower that stop loss to make sure this trade will no longer cost me any money. If you flip to a bullish trade off the green star, you should have done the same in the opposite direction of the red star. You got to be consistent. I just lowered my stop loss to be very conservative. And now I hope I don't get stopped out. But if I do, it's still a profitable trade. Oh, there's your MRI warning. And let's see what happens next candle. Whoa. Okay. I am not exiting. Why? Look at this disaster. Why would I exit my short trade? I have no reason to. Even though it's an MRI bottom, I started extensions, and I might get a 1 to 4 candle correction, but I need some strength. I need some strength. So I'm going to set a profit take if there is strength on the next candle. Because if there is no strength on the next candle and it's just water falls down, I want to profit from that. Oh, and there it is. I looks like I hit my purple line. So I have taken my profit, and I'm a little upset because I could have gotten a lot more profit, but it's still a good trade to the downside this time. Made another 20%. And I'm going to wait. I never enter trades on the first candle of a trend. Let's see what happens next. Whoa, that's a big candle. Now, you could have entered a buy here for the 1 to 4 candle correction to the upside. I didn't say it, so maybe we didn't, but that's strong. Any more strength, and I'm ready to buy because I should have been looking to buy off of this bottom. However, the candle closed bearish. Yep, and the green star is about to show up, and I already want to be long on this because I should have been long earlier. Could have been long right off of this candle. By the way, in real time, I remember this. I tweeted out to buy off of this candle on Twitter. So if you go to my tweets from July 16th, you will, or even the day before, like this area here, I was already tweeting out how these are buying opportunities. And it had nothing to do with the MRI, to be honest with you, for other reasons too. I didn't start looking at the MRI, well, or its prior predecessor, until we hit $3,000. This is where I first realized that, yep, I was looking at MRI equivalent at the time because I spotted it here on a weekly scale. I remember that. I remember that day, first time I ever pulled it up. Just go find it. This weekly, this is the first time. If you find videos from the first week of June, It was the first time I ever talked about these indicators. And we're bullish somewhere here. But I wanted to go through this example because I wanted to point out how this MRI top was not as scary as this MRI top because of the weekly MRI top coinciding with it. And this was a perfect 1 to 4 candle correction and then higher into the next MRI top, which also completed the extensions. A and C, never completed B, but it got 2 out of 3 in. And now we're bullish and the green star is about to show up and we're still going to be, and there it is. But the green star would have shown up way down here. And this was SegWit, and then you're just bullish, bullish, bullish. And watch the ascending triangle we're about to form. And look at your weekly, your monthly, everything is bullish. This created a beautiful ascending triangle, and that was the triangle breakout, which I also tweeted out. This was a gorgeous ascending triangle on a daily chart. You get all these green stars. You're bullish from here on out. And then you don't have to sell. Another reason to go bullish. News is bullish. And then you just wait for another MRI top. And that's when you want to take your profit. So this right here was a beautiful sell. Right there. Boom. And this is, you take some profit, all or the majority. And then it still goes higher. But I think this is where it's about to end. But this tells you to get back in. If I would have taken all my profit, maybe it doesn't end here. This green star, it's above the prior swing high. I'm going back in. I'm back in a long trade. And if I go below these lows, I'll just take that small loss. But it's full-blown FOMO. I am now exiting. I tried to get back in with the green star. The red star is coming next candle. I don't want to be in a long. Am I taking the short? The weekly is bullish. The monthly is bullish. I'm not ready for a short yet, though it's possible if the red star shows up. There it is. It's up to you. Do you take the short or not? I would be conservative and not take that short. Still conservative. Now I'm bullish. I'm going long off of this star. We're about to break all-time high. I'm back into bullish, weekly bullish, monthly bullish. We're back in a long trade. I'm going to stay in this long trade. Stop loss is down here somewhere, not pretty tight. Probably still holding long. But, hey, MRI top's coming. Doji candle, warning candle, extension top. If I am not out yet, I'll be taking profit next candle. Bullish candle, I'm taking some profit. And I don't add on the candle number 1. But if we go higher, maybe. And we did not. We just took a nosedive. Extension C as well. And now I am bearish. Now we've completed pretty much everything. We completed the A. We completed the C. The B still has a few more days. The weekly still has some room. But, you know, rode this wave well. And are we going to go down? And we are. Up to you. If you went long and next candle is lower, you got to cut that bait. Yep. And there it is. And are we going to go down into an MRI bottom? And down we go. So there's no way you're holding long. The MRI top almost called a perfect candle. But guys, honestly, in hindsight, it actually did. On a different exchange that I was using at the time, Bitfinex, this MRI top and this C came on the same candle, this candle or the middle candle. I think it was this one. So, and I called this top to the hour and to the $25. And I said, get out at $4,950. And that's exactly where we topped right there, $49.90. And I said, get out at $49.75. And we topped within $5 of that or something like that. And that's it. And there's your buying opportunity. Right off 3,000, I tweeted this one out as well. And there's your MRI buy. And from here, it was nothing but up. And up we went. All the way to new all-time highs. And the next time I called the top, again, buying opportunities, take profit, re-enter. take profit. I called the top for the year at the time at 7,500. I was bullish, 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 all the way into the doji candle at 7,500. And right here, the next candle, this doji candle, I called the top. And I said, this is a 10x year. We started the year at 700. We're at 75,000. This is where I'm selling. I went short here off the candle. It was the perfect trade. And that perfect trade was screwed by Jeff Garzik, who canceled SegWit 2X, busted my trade, and then it just went down after that. But this news event busted my trade. I should have stuck with the short, but it made a new all-time high, busted my short trade. I was really pissed because I was so sure this was going to fall back down to 5,000, and it pretty much did. But Jeff Garzik's cancellation of SegWit 2X created a news event that took my trade out. And I thought this would still be the high for the year, but once we broke this high, I was bullish all the way up. And in fact, I was bullish even past the 20K. Some profit, but once you break this area, you're in full bullish mode again. Continuation of trend. Hopefully that example was good, and we're going to look at other examples now. We're going to look at random examples, and I'm going to talk a little bit more about trading extensions versus the trend area. But I really hope this example on Bitcoin was very helpful. This indicator absolutely helped me trade Bitcoin back then. And you can see how we're also dealing with a monthly MRI. I didn't even notice that. I was going so fast. Look, November was a monthly MRI top. And guess where the market topped? A few days later in December. The ultimate top came. Ultimate top came. Here was a weekly MRI top 3 days after the monthly MRI top. And I got a little, and this was only 11,000. I was calling this to be the top, and I was only off by a few days. It was crazy FOMO. And then a few days later, I was bullish off the green star again. There were no stars at the time, but the concept's the same. And then from here, it was all she wrote. And then down we went. And also, look at that. Another MRI. The star gets you back in. The arrow can get you out. The red star certainly got you out. And that's when shit hit the fan. And that's actually worse than it looks on my chart. Those were big moves. This is 20,000 and this is 9,000. So those were big moves. And in early February, we went down all the way to 6. Right there, 6,000. I became a bear here. This red star, see this red star? Check the videos. January 10, 2018, I become a bear on this day. Check the tapes. I was a bull off of this green star. I was a bull on that candle. I was still a bull. I was cautious. I became a bear right there. And I stayed a bear until this year, pretty much, more or less. Applying the asset to the indicator is probably harder than applying the indicator to the asset. So what do I mean by that? If the only thing you trade is Bitcoin, you may find it challenging to trade this indicator on only Bitcoin. But if the world is your oyster and you have 1,000 assets that you're willing to trade, every day some of those assets may give you very interesting buying and selling opportunities if you're patient. And this is what the alert service is supposed to do. But let me go back to screen share right now real quick, because I just realized that the candle that I stopped the screen share was an MRI warning candle. That means next candle has a high probability of full reversal. So after such a catastrophic fall of like 75% from the top of an MRI candle to the bottom of an MRI candle is a 70% correction. If you go to the close, it's a 63% correction. So that's a big fall. So I am very interested in this buying opportunity, especially off of the strength. I may even be buying it already. And we can see just the next few candles. And as you can see, that was a very good reversal. And I think this goes higher. And it does. So that's absolutely beautiful. So look at that beautiful buy right off the MRI in Bitcoin back in February of 2018. Okay. I'm going to stop this. And here's our current look. And as you can see, our current looks very bullish, coming right off the star. The weekly is on a 2. The monthly is on a 7. The daily is on a 6. And we still have a few extensions to go, and it looks perfect. Okay. So the alert service. Right now, it looks something like this. Now, let me see if I can find something from a few weeks ago. And then we're going to take a look at how it did. What day is that? This is early October. So here's an example. Let's take a look at it. We're going to pull up Ava's budget group. And the picture that I see has Ava's budget group on an MRI buy the first day of October. So let's go to it. What's the ticker here? Ava's budget group, CAR, makes sense. And we're going to look at what happened October 1st, because that, wow, look at that. So the alert came on October 1st, telling you that there is a double MRI buy. I did not know this was going to work out so good. I'm not cheating. I randomly scrolled through the alert service. Wow. And but it also could have notified you on this MRI, and this clearly didn't do it. Now, this is also a Friday. I would never buy this MRI bottom, because look at how horrible this candle is. And by the way, when we notified on this, I'll pull it up. Look at how low this candle was. These will look different very soon. It will match the MRI. But look where the price was. It's showing you the time, not the price, which is kind of sucks. But right here, the price is, we're just above the low candle. But look what happened the rest of the day. Look at this monster candle. But when we notified, and it's kind of random, it's luck of the draw when people notify, because this is still done manually. We were right above that candle. We were like right there. We were at 26.90. And look what happened the rest of the week. So this was one of the notifications. It couldn't be any better than that. I'm just going to randomly grab one that was right immediately following it. Like 5 minutes later, we notified on Halliburton. So here's Halliburton. Five minutes after CAR, we notified on this. Now, that's a horrible looking candle. A really bad looking candle. And I wouldn't buy on this candle. But if this candle reversed, I would be very interested. So let's see what happened to Halliburton. I'm going to close CAR. That is probably the MRI candle. Yep, there it is. And there was no strength on this candle. But look at the next candle. It shows you some strength. And though it wasn't great, why didn't this give me a green star? I wonder. That's why. No, that wasn't it. So what? Oh, yep, that was it. That was it. And It was one candle off the bottom, but certainly did pretty good. But like I said, there's no such thing as free money. You will have to think, and you will have to make a lot of decisions. What about 5 minutes after that, we notified on Kohl's. So it's all the same day. Kohls, Kohl's. Same thing. The bottom on October 1st, and there it is. Look at that. And up we go. Did we notify on any tops on that day, October 1st? We always like to point tops and bottoms. So here's one. Here's a top on the same day. So this way we're not biased for the market. October 1st, Applied Materials. Applied Materials, a top on October 1st, right there. And we did drop the following candle, but then we extended the trend. So if you took the short trade off of this, it was probably a losing trade, but a very, very small losing trade. And look how quickly the green star comes, which is a little strange because you're not trading higher than the prior candle's high. So let me check my settings. And that is a potential bug again, unfortunately. We will iron these out. And my developer will watch this video and he will see exactly where we're looking at. And because while this is even a continuation of trend, it may only be using these. All right, we're in continuation of trend territory and the prior candle doesn't apply. I set it to last candle's extreme. So if I set this to prior candle, it should move that star. I hope. And this, I want to be last candle close. Or maybe it won't, but I think the star doesn't belong here. Or maybe it does. They may not have to be together. I think it's correct in that this candle traded above the prior candle's high, but the star was delayed until we had a close higher than the last candle's close. And that happened here. So they don't have to happen together. So the star wouldn't be delayed. The star was on this candle, but then when it pulled back on the close, the star went away, but the high remains. So all we were waiting for is a close above this close. A lot of intricacies here, a lot of permutations, and it's still a work in progress. The stars are still in complete beta. Okay, so this is the alert notification service. The website will change, but I'll show it to you. I'll probably teach this workshop again one day. The website will be MRI alerts. It'll look like this. You'll get them through Telegram, probably. You'll get them by email. It's still a lot of work to do. We don't know how much we're going to charge yet. I was hoping to launch it next year, but everything just moves so slow, unfortunately. Trying to do the best I can. All right, enough advertising. Let's get back to something useful. Or I can entertain more questions. Right, the alert service will be customizable so that it only alerts you on what you want to be alerted on. Look, here's the deal. I was an aggressive trader of the MRI. So, or back in the day when I used to trade the Tom DeMark stuff. I was an aggressive trader. I would trade the trend phase, but not every trader does. The person that I kind of learned to trade from, he would wait for the trend phase to end. And then he would trade the extensions. That's where I learned the 1 to 4 candle correction. And if it rises after the 4 days, you're comfortably entering 4D extensions. And if those extensions are reaching other tops, you can then consider taking profit, but they just create more extensions. Everyone trades it differently. Right now, we're waiting for the final extension to end. The extension from this MRI top will finally complete because the extension from this MRI top has been canceled. It's been canceled because we went under this dotted line. This had 2 extensions. See, there was a B11 and a 1 behind it. But that extension should have been canceled. And all we're waiting for now is the completion of this B trend. It just needs to trade higher than the close of this candle. Once we trade higher than the close of 35.09, and the close was here at 34.85. So another 30 points up, and we will complete extension B, and then all extensions will be complete. If there's no other questions, here's what I want to do. Ideally, you want to wait for an alert, but out of randomness, can someone, the first person to raise their hand and name a stock, or, well, I don't want to use a shitcoin. Name a stock, something that I don't look at very often. So no Netflix, no Apples. First person to raise their hand gets to name the stock. All right. Unmute, Mr. Phil, and name a stock.
British American Tobacco.
So you gave me the stock. Can someone else give me a date? So first person raise their hand. Give me a date at least a couple of years back. Random date. 9/10/2016. Here we go. There it is. There's your date. Now, to avoid any cheating, I'm going to do replay mode. I'm going to grab the last candle I see because now I don't know what's going to happen next. I'm going to make this full screen, and I am looking at all the details just in case. I don't really, you know what? We can do this without the details. You can use the details, but you don't need the details. But I do like to display higher level timeframes. That detail I like. And I'll leave my stars. So I'm looking at this, and I'm looking at mass consolidation. I also see how these green stars have completely screwed me up. Here, 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 here. So I'm not exactly in a rush to go long of a green star, nor short of a red star. They've been a disaster. And I am aware of this. So what am I looking at? I love this consolidation. I love to go long above the break of the resistance line of the MRI. And it will probably create a weekly bullish opportunity in this trend as well. So as of right now, I am doing nothing. But I am ready to go long because I think this thing is due for a breakout. But I'm going to wait for the TA to give me something. So let's see what happens. I'm not going to buy yet, but I am tempted to go long above this line. But I will wait till the break of the resistance line. And there it is. But I hate buying at the open. But these are intricacies. So am I in this trade? I don't know. I honestly don't know. If I'm in this trade, I'm losing money. If I'm not in the trade, and we didn't even break the resistance line. I'm going to wait for the break of the resistance line. because we have to close above it. I'm going to wait another day. Thank God. I also don't see earnings. That would have been a disaster. So we're going to wait patiently. I'm waiting for this breakout, but I'm also waiting for the break. An actual, like, even if I would have gotten in long, I might have just exited later that day on a short, because that's just a horrible candle. And that was unexpected. But now my extension B finally ends. That is coming from this MRI bottom. I am willing to go long if we break that candle's high. But I'm going against the weekly trend. But that was a big drop, and I'm going to trust extension B. Nope, but that's a very tight reversal candle. I'm going to do something. Again, this is where you find other assets, but I will go long, and my stop loss can be here, but not on the same day. Not on the same day. On the same day, my stop loss is there, but the day after, my stop loss goes to there. We never went in long. It just keeps going down. Did I miss my shorting opportunity? Maybe. The red star would have gotten me into a short trade, but the extensions told me to be careful. This indicator will contradict itself if you are looking at all the parts. But it's too late. I'm not going to chase. I don't chase. And we're sitting at support. Even though the weekly, we still have no trade. We have not traded this asset yet. We're going to wait for a buying opportunity. Another buying opportunity, and this one is interesting. I actually missed it in real time. But here we have an extension C ending with an MRI warning. And to be honest, I would buy in a little bit when we're breaking this doji's high. But I didn't say it. So let's say I'm in for a quarter of a position at the end of day. Stop loss right there. There's your MRI, and I will add to that position above the green line. And I am out of this position, but I only went in a quarter of my intended position, very small. And now I'm almost ready to go short. I want to make up for this little loss. Very small loss, by the way. Quarter of an intended position. I'm going to weekly, plenty of downside. Looks bad. But I'm not going to chase. I'm just going to let it play out. Not everything is a trade. I am more interested in shorting now than I did back there. Now I have a red star. Now we clearly have continuation of downtrend. Weekly is looking bad. I will try this one more time. By the way, I might lose on every single trade here. I will try this one more time. And if we trade below this red line, I am in on a short trade next candle. I'm in on a short trade. My stop loss, I'll just use this green line. Stop loss is up here. This stock gaps. I think the UK drives it. It's just so erratic in the US markets. What the hell happened there? Okay, so here's what happens. I would not have been stopped out. And if you watched the risk management video, you would know why I wouldn't be stopped out. When a stock gaps above my stop loss, I remove the stop loss and I give it half an hour or sometime in the early part of the day to keep moving. I am out of this trade, but not at a loss. I guarantee you I would be out of this trade at the end, by the end of the day, off this monster rebound. I don't even know why the hell this happened, but I would not have lost money on this trade, but I would not be in this trade anymore, even to the downside. You have to watch the risk management video to understand why that would have happened. And now I'm trying to go long again. Next candle, maybe. Let's see what the next candle looks like. And I'm still going against the weekly trend. Things are not lining up. Double MRI bottom. I will go long next candle above that green line. Finally, unfortunately, we gapped once again. So it's very possible I'm not in the long trade because the gap didn't let me get in. I could have said I'm in at the close, but I wanted to see how the next day opens. But this thing gaps so much. Like, to be honest, I would never trade this asset. It gaps too much. I don't like to trade assets that gap because they're very unpredictable. So if I was in this long trade, my stop loss would be back here, but I probably did not get in because it gapped over my entry. But it is started to go higher. I would be setting a break-even stop loss. And if we go below this low, I would be out, hopefully break even. And I would be out break even. And now I'm going to stay patient and wait. One more shot. If you take the trade off the star, you're in long when the star showed up and the star remained. So there's no reason to exit that long. And that is a losing trade as well. And if it goes any lower, and this is the problem on an asset that gaps, you have to be conservative and you got to just get out. Because what if it gaps to $50 tomorrow? See? Let's try a different asset. So here's JPM today. We're going to use the same date we used last time. We're going to grab the last candle, which happens to be an MRI top, which is beautiful. All right, we're going to try this again. This should be better. Well, hopefully the results are better, but at least the stock will act more rationally. Okay, so I'm going to look at the next candle, and I know an MRI top's coming. So we're going to pull up the MRI candle and then evaluate. There it is. Weekly is halfway there. How far have we gone up? We've gone up pretty far. I'm short off the close. I'm short off the close because I have a very defined risk. I have risk of a new swing high. And if we get any weakness, I'm going to lower that to the candle top body. And I got an alert. I had JP Morgan on my alerts list. I got alerted of an MRI top. And here we go. Let's see what happens next. Let's go to big screen. Well, my stop loss held and my position is profitable, but it certainly wasn't without concerns. In a perfect world, I would have been patient and I would have shorted at the same exact price, but waited till it crossed it because it opens up here. I bet you it trades up early in the morning and then it crashes. So had I stayed patient and shorted it on this day at the same line instead of the day before, I would have been more calm that day and not stressed. A lot less stressed, but the entry is the same. Profitable so far. By the way, if earnings comes, we're out of the trade. We are not going to hold this through earnings. And dividends, maybe. We'll hold it through dividends, but we're not going to hold it through earnings. But we are short. So if we're holding it through dividends, anyway, I'm not going to get into the weeds on that. Beautiful. And then I have a star, but I'm already short. And guess what I'm doing? I am setting a break-even stop loss. This trade should not cost me money. Where's my Friday? I hope this is not a Friday, but I'm lowering that. Stop loss holds. You know, everyone remembers when they got stopped out by a penny. You really remember when you missed that stop out by a penny. And I am ready to lower that stop loss because, again, risk. We close down there. I'm comfortable making sure I make some money on this trade. It's been 3 days. I'm lowering that stop loss potentially to even into this candle. Ooh. God, gaps suck. Well, I would have been out without a loss, because if we gapped over my stop loss, I would have removed the stop loss, allowed the stock to pull back, but at first sign of strength, I would have gotten out. That's also described in the risk management video. So I would have been out of this trade. I would have been kind of pissed that I didn't. I mean, you were up big. You were up big. Well, maybe not that big. It looks bigger than it was. But nope, nope. I am out of this trade with a cup of coffee to profit. I'm not going to let a winning trade go into the red. And now I am going to consider going long, since I just made a profitable trade on JP Morgan, even though it only bought me a cup of coffee. The green star shows up tomorrow, and it's a nice one, because it would break the prior swing high. So I would be long. Screw the gap. I'm FOMO-y, so maybe I go in 50%, not full, because I was full short. And I didn't get a chance to get out with a good profit. Stop loss. Ooh. Let's see if we get in, and then we discuss stop loss. Probably below the candle. And we're definitely in. Stop loss, I'm already at break even. I don't want to mess with it. Already break even on this stop loss. Oh, I'm sorry. That's my entry. I can't be break even on the stop loss. I should get rid of this red line. Stop loss, probably below that candle's entry. Sorry, that candle's low. Wow, that was a good trade. I have no idea what happened, but I trusted the star that followed the MRI top. And this thing is gapping as well, but at least it's working out somewhat in my favor this time. It shouldn't be gapping this much. Stop loss up there. Let's see what happens. Great. I'll move into the middle of the candle. Wow. I'll raise it to the bottom of that candle. I could be a little more relaxed on this. I just don't like the gaps. But I'm hoping that it gets to an MRI top, and then we can properly evaluate the situation. Yes. I don't know how close we are to an MRI top, but I'll get that orange arrow soon, probably next candle. Yep, there it is. And I'm probably out. I'm probably out a little higher. I'm probably out. I probably would have raised that stop loss. I'd be out right there. That's a good gain. That is definitely a clean gain. How much did we make? 11% in about 7 days. It's pretty damn good. It's a good trade. 100% MRI. I didn't look at anything else. Only MRI. Only after that, after the disaster with the British stock, we made up for it with JPM. Am I going to short this? Am I going to flip to a short? Well, my weekly and monthly are bullish. I will go short if we start trading lower than that low. But I will be very conservative with that trade with a very tight stop loss. And I never took the short. I will actually raise my entry for the short to just below that doji. But I'm also ready to go long. I would never trade an up candle after a top, but I would certainly trade the down candle after a top. I'm not in the trade, but I will take the short below the red line. And now I will actually raise it and take the short below that candle's low. And I am in on the short trade. And my stop loss would be very, very tight. And now I am out of the short trade with a tiny loss. And if I am not long yet, I will be next candle. The moment we break this candle's top, I will probably get a green star as well. So if I am not already long, I will be tomorrow. and I am long. There's the star. There's the candle. I'm in profit. Stop loss for the moment, because it's so bullish, I'm going to go just below the swing low. But if we go any higher, I may go immediately into break even and make up for that silly short trade I tried to do off the MRI top. So you see how I trusted the MRI top. I took the short, but then I flipped it to a long when I realized that the MRI is not reversing the trade. There is not reversing the trend. And nothing to do here. Still nothing to do, but I am going to tighten up that stop loss because I'm getting a little more concerned. And even though I'm getting less concerned, I'm going to tighten up that stop loss again because I should have gotten a move by now. And the moment I get another upwards candle, I am going to go to a break even like that. And now I am going break even. And one more update, and I'm absolutely going into the bottom of that candle for a reasonably profitable trade. But I'm going to give it one more day before raising that stop loss. Perfect. So I'm not just going to go here. I'm going to go all the way to the bottom of that candle. I want to protect some of my gains. Am I taking profit yet? No. I'm going to wait for an MRI top to take that profit. Well, here we go. This is the end of extension B and a warning for an MRI top coming in. And if I haven't taken profit yet, I'm going to set a very tight stop loss. And I'm going to also add a take profit line up here somewhere, because I don't know where. But if we go higher, I want to take that profit because I know that it's an MRI top next candle if we go higher. If we crash next candle, we'll never get to the MRI top. But next candle, if we go higher, somewhere on that candle, I am going to take some profit off my trade. And it's definitely, unless it gaps all the way below this green line, this is going to be a profitable trade. I also have a very tight stop loss and a generous take profit. But no matter what happens, I am taking some profit on this candle at some point. Beautiful. So I am probably taking profit at the end of the day, though this is like the one candle that tells me not to take any profit because look how bullish the candle is. But I'm still in this trade. I have not fully exited this trade. I will take half my profit somewhere in this candle, could be anywhere. I'm going to cheat and say it was in the upper half of the candle, which it honestly would have. I mean, why would you sell if the stock is going up all day? I like to sell on a pullback. I would have probably said that morning as the stock was rising high, I would have set a trailing stop and just went out, had some fun. Okay. We are already up another 5.5%. That's pretty good. Few days on a stock, up 6%. That's pretty good. So I'm still long the stock. I have no reason to get out. But if there's weakness, I'm going to get out with my other half of the profit. I'm willing to put the half of the profit back in if we get another green star. But we've gone up quite a bit, so I do have to slow my roll a little bit. Let's see what happens. That is at the end of extension C, but that's not a scary candle. That's not a reversal candle. I really have no reason to be scared. Did I take the rest of my profit? Probably not. It never even went below yesterday's candle's low. So I'm still in for half my position, but I will tighten up that stop loss. Probably I will let it close the gap. So if we fall to below this blue line, I will go short. The picture is too bullish. I would rather go long next candle. And I know this sounds weird. Tone, how in the world are you going long? You have extension A, extension B, an MRI top, and an extension C ending within 5 candles. And my answer to that is price is king. Price is king. If we start to fall, I am happy to go short. But if we keep rising, I am happy to go back into the asset with confidence that my weekly is on a 5 and my monthly is on an 8, though that's worrisome. And we're breaking the prior swing high. It's a very, very big candle right here. If I go long, my stop loss is going to be very, very tight, very tight. I am long, and that is my stop loss. In fact, I am going to really tighten up that stop loss to the bottom of that candle. I am not very confident that this thing is going to keep going up, but I'm not going to deny what the indicator is telling me. And I know these red arrows are there, but this is why I have those quotes from Jesse Livermore and also from Galileo. You have to understand how to trade it. And if you blindly act because the arrow is red, you're going to find out real quick how difficult trading is. I am long. I have very little risk. Let's see what happens. And now I am not yet ready to set a break-even stop loss, but it's going to be pretty damn close. And one more strong candle, and it's another trade I should not lose money on. And now I will do it. I will now set a break-even stop loss, but now I start to pray. See, I don't pray when I enter trades. I pray that the 3 days I've spent in this trade would result in more than a cup of coffee. You will make losing trades all the time. You will reflect on those losing trades, and you may realize how dumb they were. But at the time you made the trade, it should not have been a mistake, and you should have never been praying. It's like, I can't give credit to myself on this, but some trader I was working with, following with in my early days, which I never do anymore. And he said, how do you know your position size is too big and your risk is too high? There are 3 levels that you know your position is too large. Level number 1 is when your wife or girlfriend comes into the room, you quickly minimize the screen. That is level 1 of your position size is too big. Level number 2, as to the next step, as to how you know your position size is too big, you are using the words like getting killed, getting crushed, getting wrecked. This should never be part of your vocabulary. If those words, if you are thinking those words or you are saying those words, that's level 2 of how bad your position size is. And level 3, which is worse than levels 1 and 2 combined, you start making deals with God. Okay? That is level 3 of your position size is too damn big, or you are too damn leveraged. So right now, I am on a break-even trade, and now I pray that we don't gap under it or we don't hit it, because I want to walk away from this trade with more than a cup of coffee in profit. And I probably will, because I am raising it to the bottom of that candle. And once again, I'm praying. This is when I pray, not down there. You're going to have losing trades. But I'm like, man, I got in on the 7th of December. It is the 12th of December. This is my last trade of the year. Vacation is coming. I'm not going to trade through Christmas because I don't want to get divorced. And I'm not going to trade through New Year's because I'm going to be partying. This is my last trade of the year. And I want to walk away with money. This is, and if it stops me out, it stops me out. And it stops me out. Done. I'm done. My last trade for the year. I'm not going to trade into the middle of December. So we're going to go past December. Oh, too bad. There's your extension C. And there's B. We're going to, oh. Nope. I'm not trading. I'm not trading through Christmas. There's your MRI top. Unfortunate. This is where I get conservative. My entry was right there. And at some point on these 2 candles, I am out of this trade. And then these 2 candles scare me. And then this candle scares me, even though I have more bullish. And now this one. And as much as I want to go short right now, look, weekly, warning, monthly, warning, daily, sell. It's New Year's. It's New Year's. Holidays. It sucks. I mean, you kind of pray for this situation to happen. Perfect setup. All right. For the sake of experiments, I will take the short trade if we start trading below that red line. Though you could have already been in the short, but I will go at weakness below that candle's low. I will be short through New Year's, which is a no-no, but I am short. And my stop loss is right there. And one more bad day, and I am going back into break even. Nope, not a bad day. See, this is why you don't trade through New Year's. Yeah, see, this is December 30th. This is January 3rd. Lesson learned. Should have at least lowered that stop loss, or maybe got out. I expected a big crash, but look, we're on a weekly top. We're on a daily top. The problem is timing. The problem is timing. I will wait a candle. I hate this time of the year. This is your vacation time. This is not trade time. I'm going to try the short the way I'm supposed to be doing this short, which is at the next red star, which may or may not show up actually. I'm gonna wait one more candle. Damn it. Okay, I'm in for the short. This is the short I should have made the first time. It's actually at a shittier price for me too, but it's a safer trade. Okay, I'm down a little bit. I'm gonna stay patient. I got my extension. See, I'm gonna stay patient, but my patience is running out. I'm lowering the stop loss to above that candle. And sometime on this candle, I'm out. I just don't like this consolidation. Still a bet. Oh, earnings. Nope. I get to call a redo on this one. So earnings is coming. And because earnings is coming, which I didn't know at the time, I would not have taken this trade because there's no way I'm going to enter a trade 3 days before earnings. So that second short never happened. Back to the drawing board. We don't trade through earnings, and we don't take on trades the week before earnings. That's yep, there it is. But I'm not in the trade, up or down. Like I'm not. I don't know. This could have gone the other way. I have no clue. I'm an earnings trader, but not directionally. I'm a direction neutral earnings trader. This is a directional trade. And now we wait. We wait for something because right now I have nothing. And now I'm getting something. I got a short on the table. Though this candle did not trade lower than the prior candle's low. But that candle traded lower than the prior candle's low. I just waited for the close. So that is why we are in on this short trade right there when both conditions were met. See, this candle, this is the red 2 going below the red 1. I can prove it to you. Just turn this on. That's the red 2 going below the red 1. But that did not trigger the star because I also needed to close lower than the first candle. And this candle closed lower than the first candle. So once it started trading down here, then I'm in for the short. Okay, so somewhere on this red line, on this candle, I am in for the short, and I am not going to wait for the gap to close. That's my stop loss. So far, so good. And now I have to exit the short. I have to exit the short, and I have to go into the, I don't have to go into the long, but I want to go into the long. I got the green star. I'm going to trust the green star. They don't always work out. But I am in. But remember, the green star didn't happen up there. I didn't know the green star was coming. The green star happened here. And I had a decision to make. Where do I, that's my stop loss, or that was. I can still be in the short, but I don't want to. I could have flipped my short to a long on here, a little higher, or I could just be in cash. For the sake of argument, let's say we're in on a long trade in the middle of this candle. Stop loss below the swing low. Let's make up for that loss. Remember, we don't pray. We take our losses. Break even stop loss. Making up for that loss. I don't know if I'm ready to go that close, but maybe here. Oh, man. So either I should have just left the damn thing alone or got it higher. Would have been better. But either way, we got out. We made up for the loss, and we took some profit. And now I'm going to wait because I'm not going to get in on a 6. I don't want to. That's too late. I'm staying out of this mess. A red star's coming, but I'm going to need more than just a red star. I'm going to want to drop below that area. If I'm going to go short again, I need a little more than a red star. Nope, nothing. There's the red star. I am not ready to go short, but I will be if we go below that line. Then we did not. Next candle, I am ready to go long. I love this position. First of all, I know I'm going to get a green star. Second, we are at breaking consolidation of the highs. Weekly good, monthly getting started. This could be a huge move to the upside for JP Morgan. It's 2017. I don't know what the market did in 2017. I think it did okay. I am probably in on that long, but I am in a losing position. Stop loss is right now, I'm going to be generous. I'm going to go right where that red line is with my stop loss. I still want that green star. Not yet. And next candle, I should get it if we go higher. And we did not go higher. I am now raising that stop loss. I'm not comfortable with this anymore. We better go up and go up quick or I'm out of this trade. Okay, there's the green star. The last candle we can get it, by the way, is a 5, I think. You're never going to get it on a 6. I'm surprised we even got it on a 5. I'm leaving my stop loss, and it's too late for me to double down. I don't want to double down on this trade. I don't mind doubling down winning trades. It's the losing ones. And I love this position to double down. But it's just happening too late, and I'm too close to an MRI top, even though the weekly has plenty of room. I would consider a double down. Maybe I would add 50% to my position, not 100%. I don't know. Maybe that candle doesn't do anything for me. There we go. Now I'm in a winning position. I'm going to leave my stop loss where it is. But now I am raising that stop loss to the bottom of that candle, maybe. I am not yet taking my profit. There is no weakness in this candle. It's a warning candle. Weekly still good. Next candle, I have to take some profit from this trade, especially if I add it to the trade, especially if I doubled on this trade by breaking that line. I stayed very, very patient. Beautiful. I am taking some profit on this trade somewhere in that candle. My stop loss, I still have some. I didn't fully exit, but I'm getting very conservative. I don't mind shorting off this damn thing. I love the breakout. I think it's got more upside. Weekly is good. Monthly is irrelevant on a 1. But I'm going to set a tight stop loss, and I will consider a short right off of this for a 1 to 4 candle correction, but I hate shorting strength. Guys, I'm not even looking at moving averages. I don't care. It'd be nice there. They help, but do you see how this indicator could be used to trade without anything else other than the shape of candlesticks, which I still like? This candle does nothing for me. All it does is tighten my stop loss in case of weakness. But I'm also going to go long above that candle because that gives me another green star for continuation of trend. And I may be fully out or I may have just avoided it. Either way, I'm not short. I'm not going to go short. Let's say I'm fully out and I'm in cash. That means I am not ready to short this yet. But I am going to go long above this green line. In fact, I'm going to go long even earlier above that green line. And I'm long. Perfect entry. Look at that. Look at that entry right there. Perfect. It would gapped over my entry. I would have stayed patient early in the morning and I would have bought it on, I probably would have got it there, but not at the open, but on the way back up. This is a great stop loss opportunity. Look how very low risk this trade is. I love this bullish position and I love this very small risk. This is $90.60 and this is $89.63. Absolutely beautiful. Now, this is where I want one more up candle. I'm going to set a break-even stop loss, and then I'm going to pray that I make more than a cup of coffee. That didn't change anything. That also didn't change anything. And that changed a lot, but I'm still in the trade, but now it's a losing trade. I would not have been raising that stop loss, but now I am going to raise it by a penny or two. Below that candle's low, I will take that stop loss. This is very disappointing. I'm very bullish right here. I'm still very bullish. And I'm probably not going to raise the stop loss. Ah, that hurts. Ah, that hurts. I thought about raising it to the bottom of that candle, but have gotten me out, like losing almost nothing. I lost a little more, and I'm still bullish, and I'm still willing to go long on another green star to make up for that. Oh, oh, no. Oh, no. Oh, that sucks. That sucks. Look, I had it. I had it. It was a red 2. Went below the red 1. It actually did not give me a red star. Why didn't it? Why didn't it give me a red star? That's interesting. I'm surprised that it didn't give me a red star. I think it should have. What was stopping it? Oh, it may still be using this part. Yeah, there's a couple of kinks we got to work out. No, maybe I'm not sure why it didn't give it to me. Oh, because we didn't close lower. That's why. That's why it didn't give it to me. We have to close lower than the first, and we closed higher than the first. That's why. That's why it didn't happen. The stars are correct. Man, I'm not in this trade. I did not profit from this. I had it. Everything was right. But you know what? Sometimes the market just gets you. And it got me by a few pennies, and I missed the perfect trade. And now I'm not going to chase, and I will find another asset, and I will just wait and stay patient. And I'm not shorting this. There's no MRI top. Yes, it's a red star, but I don't like this for a short. I'm just going to stay patient. Maybe I'll wait for a weekly top and go off of that. I'm not going to. Nope, it's a warning candle. I wish I had an MRI top to work with. Do I want to short? Next candle will be a red star. I would probably do it. Look at my weekly. The week's coming to an end. Weekly top coming in. If I get a red star next candle, I'm short off the red line. And I am short, and it went through my red line, and I am short. Stop loss right there. Beautiful. Look at that. And I shorted on the first day of a weekly MRI top. Oh, I made up for that horrible. Okay, that's okay. I made up for it. Set my stop loss right in that candle. I'm going to make more than a cup of coffee on this one. No profit take. Profit takes Lambo. Let's hope JP Morgan does a lot of illegal activity and the government finally shuts them down, my old employer. Look, when you're short a stock, you're praying for a full collapse. Well, not praying, but you'll definitely make money. JP Morgan collapses. Well, good for me. I'm going to even lower that stop loss. Oh, maybe lowered it a little too much. So I'm stopped out. I mean, I get conservative with my stop losses. I try to make good entries and I try to make money. And like, you know what, these little trades, they add up, especially if you do several a week. They add up. Depends on your leverage. I might have gotten stopped out. Like in reality, I would have looked at the number. In reality, I like on the short side, I like setting my stop losses at around 55 cents. So I would have set around $88.55. I don't know if that would have kept me in the trade or not. There's a reason for that because round numbers tend to reject. And ironically, so here is 88.55, and you can see how it went to exactly 88.50. And I know this from my trading experience. See, look at the high that day. The high is 88.50. Look at the upper left-hand corner. That's very common. Round numbers are important. So if I'm going to set a stop loss, it would be above 88.50 or above 89, like 89.05 or 89.06. Or if I was going to go lower, if I was going to go 88, my stop loss would have been 88.04 or 88.06. So if I would have gone with a stop loss in the 88.50 range, I would have been above 88.50, even by a penny or two, because those round numbers, so many people love to enter trades at round numbers, love to exit trades at round numbers. So chances are I may still be in the short, but technically I randomly put the line in and it doesn't matter. I'm out with a profit. But had I still been in the trade, I would have waited for an MRI bottom. And I'm going to go back in short. I mean, it's a weekly sell. I mean, what else would you do? So even if I did get out of the short, I would have been right back into the short. So let's say I'm back in on this candle. Let's not cheat. We'll put it in the middle. I'm still comfortable on the short for now. If I was short the first time, I certainly would have kept lowering my stop loss, and now I would have been out. Now I'm not as comfortable, and it's also a green one. So now I'm out no matter what. Either way, it was a profitable trade. But if we go any lower, I'll go short again because I'm still playing the weekly scale. I'll go short below this line. Hopefully, it comes with a red star. Nope, it's green. I'm not going long here. I'm respecting the weekly sell. But I will take the red star short. Next candle, red star short. No red star, but red star short next candle, I'm short. Boom. I'm short off the line. Lowering that stop loss. I'm still trusting this weekly top. I want to get one good trade out of it. If we break support line, that's huge. I would lower my stop loss, lower my risk. I'm not ready for that break even yet. One more down day, guys. Come on. Thank you. Now I'm ready for the break even. 2 more days until an MRI bottom. See, that's the warning. And I'm closing here. I'm lowering that stop loss. Any strength, I'm not in the short. Am I going to go long? I still think there's more downside. Look at my weekly. We're on a 4. Halfway, not even halfway, to a potential good buying opportunity. So I'll stay patient, keep the stop loss, maybe take some profit. Where's my purple? If we fall hard, maybe I'll take some profit. It depends on what the candle looks like. Oh, that's interesting. That's very interesting. See, I don't know. Oh, it's earnings. Crap. So this means I would have been out on this candle. I didn't know earnings was coming. I would have been out on this day. There's no way I'm holding it through earnings. So I am fully out. I took my profit. Oh, my entry was here. I would have taken my profit hopefully by the end of the day. I'm not doing anything next candle, but am I bullish or bearish? I'm definitely bearish, and we broke the support line. But I never trade the first candle in the same direction as the trend when an MRI ends. So we wait. This is why we wait. And is this a buying opportunity? Maybe. I'm going to actually wait another candle. And if we go higher, we're still not going to get the green star. But if we go higher next candle, I will go long. I think the 1 to 4 week correction is over. And let's see what happens. Nope, no trade. I'm also willing to go short. below these lows. So I have both a long possibility. I'm willing to go long and I'm willing to go short. I have reasons for both. And right now I am going to be in a short trade, and next candle would give me a star. I'm probably not in that short trade yet because this would have been happening at the end of the day. But if we go below this line again, I will be short. And if we go above this line, I would be long. It's that simple. Below this line, I'm short. I'm actually going to raise it. Any weakness tomorrow, and I'm short. Thank God. But I'm not long either because we gapped over my entry. So I have no position on this, in this market. I have no position in this market. It's running away from me. I have no position. I'll wait. This is why I don't chase. Hey guys, I can do this all day. I can do this another hour. We're still in 2017. We got 3 more years to go. But I think you get the point. I think you get the point of how I trade the MRI. That doesn't mean you have to trade it this way. You need to come up with your own plan to do it. Okay? I'll do
Hey,
it.
Tone.
Yeah.
Sorry to jump in here, but I'm talking about the orange dots, this breaking those to the upside versus the light blue line, breaking that to the upside, the resistance.
Right. Okay. Right. So those are actually red, not orange, which is why I was confused a little bit. But yes. Okay. So here is the dilemma, right? When the blue line shows up, there may not be an orange line, and there probably won't be. See, there's a blue line here, blue line there. There's no orange line because this blue line comes from this trend. You see how there are, like when we go up, we create the blue line and we create a support line. Breakout line, there is no resistance line here. To get the resistance line, you need a downtrend. This creates the resistance line, but then you have no breakout line up there. The breakout line is down there. So they are opposites. So you can't really compare them. Now, it is possible that you can have something like this. So here's a situation where you have a very old resistance line and you had a breakout line and a breakout line here, but they're all near each other. So it's really up to you and it doesn't matter. They all mean similar things. Breaking this resistance line is similar to breaking the breakout line, but this actually serves as resistance. The breakout line does not serve as resistance. So does that kind of sort of answer the question?
Yeah, I just meant that the resistance line, a long resistance line, is my personal favorite thing to trade. I love to see a long resistance line. And I just meant for a bull case or for a signal, are they on par with each other if you break either of them? I didn't know if you had a favorite or if they...
I don't, to be honest, I have not really been a big trader of the resistance line, but you're not the only one that has told me that they love trading this is why I changed the name. In the prior indicator, we weren't calling it a breakout line. That blue, you're talking about the breakout line. You love trading the breakout line. This one, right?
No, I love trading the long. It used to be, you used to call it setup trend line.
Right. Okay. That one. Yes. Okay. Like something like this long red one.
Love it. I love buying that stuff.
Oh yeah. That worked out fairly well on a longer time horizon because you did pull back. But yeah, but if you keep the time horizon in perspective, then that worked out really well. Yeah, I find those very useful as well. Like something like this. Broke that. Yes, it pulled back, but then it took off. This one, not so much, but it's not that long. And this one ended because you had another one. Yeah, they're rare. No, I don't really have a big preference. But it was great how we caught, this whole move up.
So last bit, and then I'll leave you alone. The breakout line in this new update versus the old, did you touch on how those are different, or if they're different at all?
No, they're the same. It's just
Okay.
I changed the name.
All right, that's it.
It gets created by taking the lowest point, which happens to be this point, and adding to it the range of the candle, which in this case is ridiculously far. So that's why I was going to come up with another math rule to make it more reasonable. Okay, so I have another question. How can you use consecutive MRI tops? Why are consecutive MRI tops useful? Well, consecutive MRI tops useful is because the bigger and faster something goes up, harder it comes down. And a consecutive MRI top, I love them. I've been looking at so many charts with consecutive MRI tops, and they just, when they work quick, fast for big moves. So that's why I find the consecutive MRI tops very useful. And we have another question. Any comment on the blue breakout line? How we can possibly adjust it? You can't adjust it, but right now it's hard-coded to be the highest point plus the range of the candle that made highest point. On the downside is the opposite. Lowest point plus range of the candle that made lowest point. Sometimes it's the last candle. Could be the first candle if it's, swung deep and came back. But I want to make them a little more dynamic. Here is the highest point. You add to it this entire candle. There's your breakout line. But then you had another MRI top, and look how close its breakout line is. Because now it's using this candle and just doubling that candle. This actually seems kind of high. A little high. That is $3.28. That is correct. $3 and yeah, that is accurate. And then right here, that is only 95 cents, and that is 95 cents. Okay, so these are accurate. They look weird, but they're very accurate. And you can see how this breakout line is almost meaningless. Like, I don't want to buy it up there. If anything, I want to buy it on the green star. I want to buy it when it breaks these highs. But this one is very useful and created a great buying opportunity. And it was in line with the star. But look how far away these are. Like, this needs to be a lot lower. And this one is fine. I don't have a problem with this one. But this one is unreasonably high. This one is borderline high. I would like it a little closer to the consolidation. This one is too high. I'll never make it higher, but I want to bring it down. So this one created this. Oh, what is that? And this one created that one. But I'm not sure why that's there. That may be a bug, guys. It doesn't belong. And there shouldn't be one down here because the condition of this candle, like this never made it to the last candle. Because I can already tell. Like this is not lower than 1, 2, 3, 4 candles earlier. So none of these lines would show up. It's just an MRI. These lines would not show up. Everything else, like the breakout line, the resistance line, support line, extensions, all of that only shows up if the last candle, the MRI candle, is also within the relationship. of all the other candles in the trend. But this one wasn't. But the MRI is still seen. This is what we used to call quasi back in the day. Oh, wow. So is this JP Morgan right now? Earnings is coming. But man, look at this buying opportunity. My God. Beautiful buy right off the MRI on September 25th, right into an MRI sell. Which now I wouldn't get in because of earnings, but damn, what a great trade. Other than that, I mean, it's really important that you understand risk management. Risk management, I mean, if you're in this workshop, you should know TA, but definitely, please, somewhere, got to learn risk management. There'll be a link to this in the video description when the video comes out. Just a reminder, you know, 3 parts to a successful trader. A good technical system, using that system properly, and good money management. I have a workshop on money management. I have a workshop on a bunch of technical systems. This is one of those systems in detail, but even with my detail, you can still trade it in a dozen different ways. Thank you all for joining, and hopefully I'll see you at a future workshop or the Financial Summit in Bali. Please, if you make good money, that's where you want to go, because that event is absolutely incredible. And I wish you well, it shouldn't be luck, but I wish you to sharpen your skills to make the money where the cost of that event is not expensive for you anymore. So yes, and it won't be easy. The road to trading is challenging. Thank you guys. And hopefully I'll meet everybody one day. Bye.